and that's how that happens. Best thing, though, about that is that you did not see them compress margins and not get the volume. At least they got the volume, but it winds up doing more harm than good to your pricing and your profit dynamics when that happens, though.
Kevin, Tesla has been promising for years a cheap or affordable EV, a lower cost EV. Does that even matter to the company? Is it a priority at this point? I mean, it feels like the company has so de-emphasized its traditional auto business that people don't care about it. And I wonder if the company cares about it.
Well, two things, Scarlett. Like, one, I would say is that, look, if you're having problems with margins and mix, the answer is not a more affordable vehicle, right? Because
that's fair.
Material costs, input costs, production costs are all inflating. The answer is not to get to $25,000. That actually compounds the problem. But yeah, as a passenger car company, you know, I obviously the narrative is not that, and it's probably not the way forward for this company going forward. So the idea of maybe more models, they're going in the other direction, right? Model S, Model X production has ceased now. You're talking about 3 nameplates, Y3 and Cybertruck, for what that's worth. So, you know, not acting like an automaker that's putting product in all segments and able to grow volume that way, healthy through more demand. It's really about mix, price reductions, discounting, and exporting cheaper products to other parts of the world.
Kevin, I read a really interesting article over the weekend. I think it was in the New York Times about kind of the U.S. automakers, how they've pivoted back to what actually makes money for them, which are trucks and SUVs, and de-emphasizing their EV businesses. And while that's good for near-term, intermediate-term profitability, they run the risk of falling behind the rest of the world in terms of EV technology. How do you think the U.S. auto companies are thinking about that EV strategy longer term?
Yeah, look, and the products are there, the technology is there, but to your point, the profitability isn't. Look, and as a global manufacturer of really anything, you want to share as many platforms, parts as you can, but the demand profile in each country, if not region, is not the same. You know, where money is made here are on big trucks and SUVs, pickups and SUVs. The small products that work in maybe Europe or even in China, India, they don't make sense here and they don't make money. So the idea that falling behind on EV necessarily matters if profit is the driver here, you know, I'm not sure why we need to go toe-to-toe on EV any more than we already are or tried if the profitability isn't there. I get maybe it's technology shaming, you know, by the rest of the world that says you're not keeping up, but it's not what our demand profile in this country looks like. We're not going to out-export China. We're not a low-cost manufacturer. So the idea that we're going to overtake China in EV, in export or domestically, is just not going to happen. To me, that fight is already over. So I think manufacturers probably for the time being need to be doing what makes money and enables them to innovate from there.
At what point does the American public start to need or want EVs in a meaningful way, Kevin? I mean, we already see it with people in California facing $6 a gallon gas, and now you have the Iran war flaring up again, and oil prices are back up again. At some point, the consumer behavior is going to tip over, isn't it?
Well, the consumer can only buy what the manufacturer is building, right, and selling to the dealerships. And those products tend to be what makes the manufacturer money. This is really a push market on the supply side from the manufacturer. And what you're talking about is the pull side. So ultimately, and the difference between, say, the US and China in terms of EV adoption is subsidizing your manufacturers, which we don't and probably won't do here. So if you have a manufacturer looking at an EV platform that loses, I don't know, 5 figures, $10,000, $15,000 per unit, you just don't have the motivation to build it. Now, the government makes you whole by subsidizing your losses. It's a different story, which is what happens with Chinese manufacturers. But ultimately, the automakers are going to go where the profit is. And EVs, even for Tesla, have proven that they're just not there. We don't own any of the supply chain either. China does. So the idea that this gets more cost effective going forward is also a difficult case to make.
All right, Kevin, thanks so much. Appreciate it. As always, Kevin Tynan, Director of Research for the Presidio Group. And folks, that's been Kevin's call for the last, I'm going to call 7 to 10 years, focusing on the profitability. And that's a function of his understanding of where these automakers have come from over decades. And kind of the economics of EVs, the economics and the demand just aren't here at this time. So the automakers are focusing on where they can make money, and that's trucks and SUVs. And he has been consistent in that argument over time. Let's switch gears towards the media space. Lots of news there. As always, we could talk to Geetha Ranganathan every day if we wanted to, but she's got a day job. She covers the media stocks for Bloomberg Intelligence. Hey, Geetha, let's just start with Comcast. They reported numbers here. Give us like a couple notes on their quarter, but more importantly, what do you think the strategy is of the Comcast company going forward?
Yeah, thanks so much, Paul. For Comcast, really, as you pointed out, it's more about the strategy than the second quarter results. But just a few, high points from the results. So remember, they are the largest broadband provider in the United States. They have about a 25% share of the market, but that share has been rapidly declining. And we continue to see that in the numbers today. So they again lost broadband subscribers. And really, I think what investors are focused on, Paul, is that, this story is not getting any better. So over the past 4 years, we've seen intense competition from the telecoms, both on the fixed wireless side as well as fiber. And then now this year, you have this new competition with Starlink. And just with kind of the expansion in V3 satellites next year, the expansion in broadband capacity, there is so much fear on the street that Starlink is going to become another big competitor for cable. And so just the story doesn't get any better. Now, Comcast, what they've done is they have altered their go-to-market strategy by becoming much more competitive in terms of broadband pricing. But that obviously has resulted in EBITDA getting crushed. And so we saw it, again, fall about 6% this quarter. Again, they're pointing to the story getting slightly better in the second half. But again, it's a little bit of a wait and watch. Longer term, I just don't think investors are optimistic about this cable broadband turnaround at all.
Okay, so it's kind of like managing the decline of its business right now, its main business. Is the company offering up any kind of growth story for investors to get excited about?
Yeah, I'm glad you asked that. Actually, they did that just 3 weeks ago, Scarlett. So, they are an interesting company because they're a vertically integrated media company. So, of course, broadband makes up 85% of their EBITDA, but they do have a great media business with NBC. And they announced plans just a few weeks ago to actually separate out that media business, which is, the NBC Universal business, along with Sky, into a separate company, which is supposed to happen sometime next year. Now, the whole story here has been that with the whole Warner Brothers bidding war, media assets have actually they're actually being really played up. And if you look at Comcast NBC, for instance, just the collection of assets, it's a stellar collection of assets, and it almost resembles a Disney, if you will, because they are one of the few media companies that actually has theme parks very similar to Disney, has studio, has a broadcast network, had some cable networks, and has Peacock, the streaming platform. And so the big argument here was, cable multiples have actually declined. They've halved. So they've gone from 10 times EBITDA just about 3-4 years ago to 5 times. Oof. And NBC, because it's being clubbed with Comcast, is suffering here. And so if you look at Disney, for instance, Disney trades at about 9-10 times. And so the question was, why are we punishing NBC for, cable's poor performance? So I think investors definitely are happy about that because it now kind of shines NBC in this new light, and it definitely gives them some strategic optionality as well.
And we know that Brian Roberts likes to do deals, so that's one thing. All right, Geetha, thanks so much for joining us there. Geetha Ranganathan, she covers the media space for Bloomberg Intelligence. She's based down there in Princeton. And again, if the Comcast, lots of asset value there, but in businesses, unfortunately, that are facing some really challenging competitive landscape, particularly in the broadband business, as Geetha was saying. And then even in the cable network business, the NBC Universal, their cord cutting's impacting that business.
Absolutely.
The question becomes, can streaming growth offset that? And they had their first...
How high is Peacock on anyone's list of streamers that they need to have?
Although we just subscribed to it because Karen from the Jersey Shore has a show she likes. So that's...
Which one is that?
I don't know. It's the one with Jennifer Gardner. That's all I know.
Okay.
Okay.
So, during the Olympics, I can make
Yes.
a case for it.
Yes.
Now that the Olympics are over, I'm kind of like, what do I get for
Exactly.
this?
So it's subscale, as they say in the industry.
Subscale.
So that's why they're thinking about, when you put out NBC Universal as a separately standing company, maybe it will merge with another content company. Like, I don't know. We'll see how it goes out there. S&P off 85 points, 1.1%. Plumbing the lows of the day. The Nasdaq's off 480 points.
Oof.
That's 530 points. That's 2.1%. Ouch. This is Bloomberg.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. The Iranian-backed Houthi rebels in Yemen said they've attacked 2 Saudi oil tankers in the Red Sea, that leaving open the possibility of a new front in the Iran war. ABC's Martha Raddatz has more from Amman, Jordan, as the military conducted its 12th straight night of strikes against Iran.
Video posted online is said to be at a border crossing between Iran and Iraq, showing people screaming and running away on the Iraqi side. The U.S. has not acknowledged this specific strike. The Iranians say 2 people were killed. Human rights activists in Iran say there's been nearly 3,700 casualties since February.
A federal judge will today sentence Vance Bolter, who shot and killed Minnesota State Rep Melissa Hortman and her husband last year. Child car seat maker Evenflow is recalling almost 60,000 child seats as a defect can cause the headrest to shift unexpectedly and increases the risk of an injury. This is ABC News.
Hi, I'm Christina Ruffini, inviting you to join us for Bloomberg This Weekend. Catch the show Saturdays and Sundays starting at 7 a.m. Make Bloomberg #1 on that weekend to-do list. Watch and listen on Bloomberg Radio, TV, and the Bloomberg Business app.
Well, it's official. My friends have all switched to Pure Talk because I told them they could save a bunch of money on a super reliable high-speed network with unlimited data. And because they're my friends, they trust me. As for the rest of you, well, Pure Talk understands that even though you might like me, you're not just going to take my word for it, nor should you. For that reason, and for a very limited time, Pure Talk is offering any of their plans for just $15 a month for the first 3 months, including their top-tier unlimited plan that normally sells for $65 a month. Think of it like a test drive, a super simple way to save $150 while you kick the tires on Pure Talk's blazing fast network, and a fine way to see for yourself why I switched from big wireless, along with a few 100,000 of my closest friends. Dial pound 250, say Mike Rowe, and be connected to Pure Talk's friendly U.S. customer service team. Again, dial pound 250, say Mike Rowe, and let the savings begin.
Bloomberg Green returns to New York during Climate Week on September 22nd and 23rd, bringing together industry leaders, policymakers, and climate innovators to explore what's next in the transition to a more resilient and future-ready world. Powered by Bloomberg's editorial coverage and data-driven insights, we'll examine how climate intersects with the forces shaping our future, from technology and the economy to policy and community. Learn more at bloomberglive.com/greennyradio.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, Jim Caron of Morgan Stanley.
Monetary policy is there to really address a demand shock, right? So if you have high wages, an overheating economy and, wages going up, people are spending money, then yes, high interest rates can certainly help that. But when you have high oil prices as one of the culprits that's pushing inflation higher, ultimately what you're saying is that higher oil prices is a headwind to the economy. So therefore, with these higher oil prices, maybe we should hike rates and slow the economy further. Like, it doesn't really match up, right? This is a supply side shock. Monetary policy is generally there for demand side shocks. So I think it makes Warsh's job a little bit complicated. What he's going to have to look for is, are these higher energy prices seeping into core inflation? Is this becoming heavily embedded in the overall inflation and inflation expectation? Now, we saw this recently, right? If there's something that gets resolved in the Middle East, oil prices can come down $30 a barrel, right? That's not the kind of thing that the Fed should necessarily think about hiking into, at least not at this point.
What kind of screens well for you guys these days? How do you think about that?
So the way that we look at this is that we can't just rely on bonds as like the easy hedge, right? It used to be just a great hedge, just get long bonds, don't think about it, buy the index and just hold this and be a very passive bond investor. In this type of an environment, what you're seeing is that bond yields are rising, and that's hurting the prices, and that's hurting overall performance.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So if you look at the major industry groups in the S&P 500, those that are on the move, it kind of tells the whole story. At the bottom of the list, communication services and consumer discretionary. So that's home to Alphabet and Tesla. And among the best performers, energy, because of oil. Now, at Tesla, Elon Musk said in the call last night, this is a massive CapEx year. No kidding. When you spend like that, free cash flow is negative. Alphabet, kind of the same story, boosting its projected capital expenditures for the year. The range there, $195 billion to $205 billion. And again, that's kind of setting the tone for the markets. Fed meeting next week with no forward guidance from Chair Warsh. It's kind of, at this point, anybody's guess with what's going to happen. Ahead of that, with a two-front war for the U.S. now, oil surging again. Brent, $100.18 a barrel. And because of that, American Airlines cutting the 2026 earnings guidance for the second time in 3 months. Persistently high jet fuel prices, and those shares down close to 8%. Still, interestingly enough, Stephanie Roth at Wolf Research isn't too worried about inflation.
Even though you're seeing energy prices certainly spike, in terms of the actual feed through to core, the main thing is going to be from airfares. Otherwise, we still see some disinflationary pressures coming ahead.
S&P 500 down 1%, 79 points lower, 74.18. The Dow, 487 points lower, that's down 1%. And then, of course, the NASDAQ Composite Index, 2% lower, down 526 points right now. Did you know 1/4 of the world's croplands are irrigated? Especially true in the Philippines, Vietnam, Indonesia, Myanmar, Nigeria, and Ethiopia. Nearly all the irrigation pumps are powered by diesel fuel. So with soaring prices for diesel, growing worry of food shortages, maybe even famine. And I complain about, $4.26 at the Wawa?
Yep.
For gasoline. The diesel prices are like out of control.
Tom was quoting this morning a barrel of like distillates.
Oh, I heard him talking about that. The crack spreads or whatever.
It's like $150, $160 a barrel. So I mean, you want to buy the refined stuff. That's where you're really paying.
Yeah. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. Appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Being a corporate executive, never been easy, but boy, it seems like it's more difficult every year. If it's not COVID-19, it's tariffs, it's war, lots of issues out there. And I think during the pandemic, we all became somewhat more interested or educated in all things supply chain.
Out of necessity.
Yeah, we say, where does this thing come from? Where does this piece of furniture come from? Where does this disc come from? This chip come from?
The answer was usually China.
Yes, or somewhere over in that part of the world, and that's got companies scrambling to find different supplies. David Garfield joins us. He's co-CEO of a consulting firm, Alex Partners. He is based in Chicago. David, what's the conversation you're having with your clients these days about just kind of global supply chain? They have to navigate different tariff policy, wars in various parts of the world here. What's the conversation like these days?
CEOs are focused on execution and speed as it relates to their global supply chains. Their companies, they know, can't afford to get stuck in analysis paralysis. They have to make decisions and take actions quickly. And the reason is simple. The business conditions keep changing. As you pointed out, There's geopolitical disruption, economic disruption, technological disruption, workforce disruption. So leading executives are adopting a kind of restructuring mindset, even in top performing companies. When business conditions are nice and stable, you can take your time and re-engineer supply chains. But with today's conditions, a restructuring mindset really helps. And one more thing that CEOs are doing is focusing very heavily on their cash flow, in addition to their traditional P&L and balance sheet metrics, because with all of the disruptions that we're experiencing, there can be sudden and severe strains on cash flow that are very much out of the norm. If we think about, trade disputes, for example, a company can experience a spike in raw materials and a drop in demand simultaneously.
Right.
So CEOs are focused on visibility and control over their cash.
I like what you said about how they have to adopt a restructuring mindset. But once you restructure, you kind of hope that it'll last for a little bit before you have to make changes again. Are they in a constant restructuring mindset, meaning whatever they put in place, they'll have to blow it up and change a month later or 6 months later?
So CEOs are trying to be as agile and as flexible as they possibly can. So not necessarily blowing things up, but shifting and adapting on the fly as business conditions change. A great example of that is what's happening with tariffs. Of course, we had Liberation Day tariffs, then we had rebates. Now we have 301 tariffs being added. The companies that, when tariffs were first put in place, established tariff war rooms so that they could monitor changes in real time and make adjustments not only to their supply lines, but to their pricing. The companies that have kept those war rooms up and running are now in better shape to deal with the ongoing disruptions in trade and transit. That's a great example of having a restructuring mindset, not necessarily blowing things up, but being able to adapt and to remain agile.
At the same time, they have to adapt to this new thing called artificial intelligence and how it impacts their business, either for good or for bad. How's that conversation go these days?
Companies are deploying AI as fast as they can, but the ROI is often missing. The winners in terms of AI deployment are the companies that are pursuing practical AI solutions. This is specific applications that have very strong business cases. What we see is a lot of companies either struggle with AI because they get stuck in the strategy phase. They build up an inventory of use cases, but don't pull the trigger and execute, or they try to do AI everywhere all at once. And that, of course, is very slow and can be very costly. So the winners in the space are focused as well as fast. And if you want, a great example, we worked with a telecom company to help them deploy agentic AI to optimize their field operations. So these are the people in the trucks who go out and install and maintain the cell towers. And the agent not only optimizes the route that they drive, but also the approach that they take to do the installation or make repairs. This is a focused solution. It's very practical. It's saving the company millions of dollars a year, and it's up and running.
I thought the way Paul introduced you and kind of introduced the topic made a lot of sense, how supply chain was something that we didn't used to think about. It was kind of invisible. We just took it for granted. And now it's very much top of mind, front of mind as well. Is this an industry that is growing, that is hiring? I mean, is there more need for supply chain experts or people to enter the field than before?
Supply chain has always been kind of a quiet area, but a hot area, meaning where, strong operational and deep analytical skills really pay off because, it's the lifelines of the company, their cash flow and the flow of goods. So I would say that it is a strong area in the labor market, particularly for people who can understand international and multinational trade flows and who can apply leading technology to solve some of the problems that are cropping up in supply chain management.
All right, David, thank you so much. Appreciate that. David Garfield, co-CEO of Alex Partners out there in Chicago, talking about supply chain and just kind of the changing playing field for CEOs and boards that they have to deal with. A, technology, B, trade policy, trade uncertainty, and armed conflict in various parts of the world. Tough to lay down strategy.
It's a very different playbook than what it was after the WTO, after NAFTA, where it was increasingly about outsourcing, and now it's about reshoring and bringing things home and making it more resilient.
Yep, and that arguably, if you listen to some economists, has some inflation concerns to it. If you're bringing all this stuff back home, it's higher cost here, and that could result in higher prices. So it's one thing that economists are following. Markets are off here today by more than 1%. This is Bloomberg. Good morning.
Now, your 3-day weather forecast on Bloomberg 92.9.
Sunny skies this afternoon, high around 80. Clear tonight, low in the lower 60s, 50s in the suburbs. Mostly sunny Friday, high in the lower to middle 80s. Clear Friday night would drop to the lower to middle 60s. Sunshine and a few clouds Saturday, high 80 to 85. A mix of sunshine and clouds on Sunday, highs will get up into the upper 70s. I'm Scott Kaplan with your weekend forecast on Bloomberg 92.9.
Big Tech reports earnings.
Alphabet earnings now crossing the wire.
Second quarter revenue coming in ahead of estimates.
The company is raising its capital spending forecast.
And Bloomberg brings you the headlines first.
Tesla, second quarter adjusted earnings coming in below estimates.
Netflix, second consecutive quarter of slowing sales.
For breaking earnings news and expert analysis.
Investors are getting a little bit more discerning about this AI spend.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app. And always on Bloomberg 92.9.
Looking for a sharper edge in today's investment markets? Then look no further than Franklin Templeton's private market platform to unlock a broad universe of income potential, diversification, and growth strategies, helping investors pursue their long-term goals. Add some ingenuity to your portfolio with the time-tested wisdom of Franklin Templeton. Learn more at ftprivatemarkets.com. Again, that's ftprivatemarkets.com. All investments involve risk, including loss of principal.
Hi, Jose Minchero here, Head of Portfolio Analytics Research at Bloomberg. Are you looking for a risk model that adapts quickly to today's volatile markets? One capable of providing accurate risk forecasts and efficient optimized portfolios, all while mitigating those pesky correlations between idiosyncratic and factor returns? If so, look no further than the Bloomberg MAC 3 risk model. Visit bloomberg.com/risk-modeling to learn more.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Max Chafkin here from Everybody's Business. This week on the podcast, we talk about how Trump is profiting off the presidency.
Donald Trump is an 80-year-old man who has been in business for the better part of 60 years. And in no single year, in that entire 60-year span, did he earn as much money as he did during essentially the first year and a half of his second term as president.
Listen to Everybody's Business from Bloomberg Business Week on Apple, Spotify, or wherever you get your podcasts.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good Thursday morning. Not so good if you were long equities and you're looking at the red on the screen. It's considerable. The NASDAQ Composite Index down 2.4%. The S&P 500 down 1.25%. Alphabet, the catalyst for today's sell-off. And it's kind of rippling across the growth complex here. Of course, oil prices rising are one of the things that are bugging investors right now. Brent is above $100 a barrel. WTI now approaching $92 a barrel. And that means that it's also a concern for investors and executives at airline companies. American Airlines came out with results, lowering its outlook. Southwest, its guidance reflects the higher fuel expenses as well. So let's bring in Benedict Kamal. He is Bloomberg's global aviation editor. He joins us now from Berlin. Benedict, just walk us through the tone that American Airlines and Southwest are setting here when it comes to how they anticipate fuel costs to affect their expenses and their earnings going forward.
Hi from Berlin. I mean, it's a sense of disappointment, really, if you talk to American. The CFO said, look, only 3 weeks ago, things were actually not looking that bad. And if we'd sort of closed the accounts 3 weeks ago, we would have had a very different set of numbers. But since then, things have really gone south for the airline industry in particular. And that's because of the oil price that you've mentioned. This is one of the big expenses, if not the biggest, the fuel price for airlines. And they are really susceptible to swings. And we've seen a lot of swings. And it's all swung up lately. So what we see here with American is a pretty negative outlook into the full year. It's the second time in exactly 3 months that they've had to cut their guidance. They are more pessimistic now than they were even in April, and they now expect a loss for the year. That seems likely. Investors and analysts had hoped for a profit, so that's something you see reflected in the stock, which is off sharply today. It's also an interesting contrast compared to what we heard from Delta and what we heard from United. If you lump those three together, United and Delta are probably more sort of in the area of sort of the premium traveler, whereas American is trying to get more to the premium segment, but they're not quite there yet. So they are more affected by the low cost and the more price susceptible travelers, and that's something that is really showing up in their accounts today.
What are the airlines saying about customer demand? I mean, we know the costs on the fuel side are a challenge here. What are they saying about customer demand?
Well, it's a pretty diverse picture. If you speak to somebody like Ed Bastian, who runs Delta, or Scott Kirby at United, they will tell you, look, we're lucky. We have the well-heeled, high-paying, front-of-the-plane customers who don't, frankly, really care whether their ticket costs a little bit more or less. These are sort of price-immune travelers, by and large, and we can absorb, and they can absorb those kinds of hits that come with higher ticket price and so on. If you sort of go down the food chain, as it were, and you move to the back of the plane, obviously people are a lot more price susceptible, and that's where your Southwests, your Americans, your Frontiers, those types of airlines that sort of serve the middle and the lower end of the market, that's where they are most hurt. So what we've seen since the start of the year, and most notably since February, since the conflict in Iran started, is this sort of bifurcation of the industry between the haves and the haves not. And by that I mean those who have the well-paying customers and those who aren't quite there, who are still sort of working their way up to that food chain, and that's where you see that split in the industry.
I think about Delta and United too, with its relationship with Chase, Delta with its relationship with American Express. These airlines make a tremendous amount of money selling their reward points to credit card companies. Is that as big of a deal for an American Airlines, a Southwest? I mean, every airline has to have this kind of relationship with a bank, doesn't it?
Yeah, I mean, it's becoming increasingly important across the industry, and sometimes you think you're dealing with, credit card companies that have an airline attached rather than the other way around. Loyalty and brand loyalty have become such big things, and they are, as you said, they are massive money spinners for the industry, but you have to build that brand loyalty, and the way to build that is to have a product that people will come back to that is sticky. Somebody like Scott Kirby will say, we have sort of built the stickiness into our system that people want to come back. They like the product on the plane, they like the product in the lounges. There's a lot of investment going into sort of that part of the operation to create that stickiness. And interestingly, Southwest is trying to move into that field now. They are sort of moving up the scale to achieve exactly that. The question over time is, where's the ceiling? Not everyone can buy those expensive tickets. Not everyone has access to the lounge. Do we come to a point where we've sort of reached peak premium, as it were, and where that market is saturated and you're fighting over an increasingly small cake, and there's just not more slices that you can hand out? We're not at that point yet, but interestingly, over here in Europe, there is a much larger slice of the low-cost market, the EasyJets, the Ryanairs, the Wizz airlines of this world. So that's a far more sort of split market, whereas in the US, everyone is crowding to the high end.
All right, Benedict, thanks so much. Appreciate it. Benedict Kamel, he is Global Aviation Editor for Bloomberg News. He is based there in Berlin. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with stocks selling off. The S&P off 91 points, 1.2%. The NASDAQ even worse, off 600 points. That's 2.3% on the NASDAQ. The VIX out almost 3 full sticks here, 19.4. 10-year Treasury yields higher, 4.70. That's up 5 basis points. And WTI crude oil is up $5.10. It's almost 6%. Let's call it $92 a barrel. This is Bloomberg.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Bloomberg 92.9. Programming paid for by Bloomberg. This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is the second hour of Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. And we have a market that is plumbing the lows of the day, and it's still early. The Nasdaq Composite down 2.4%, S&P 500 losing 1.25%. You could blame it on a number of factors. Oil prices among them, with Brent now above $100 a barrel. Scott Levine, our senior energy services analyst, will be joining us to talk about that. Paul Goldberg, our senior equity analyst, will join us to talk about Blackstone earnings. Blackstone reported results this morning, getting a big boost from exits and winning bets on AI and data centers. James Abate, the managing director and head of fundamental strategies over at Horizon Investments, will join us to wrap it all up and tell us how he sees this affecting his investment process. Arvind Krishna is the IBM CEO, and he will be on Bloomberg speaking with our Ed Ludlow and Romaine Bostic later on this hour. We will be joining that conversation. And of course, moving forward, Madison Muller, our Bloomberg News health reporter, will talk about Eli Lilly's next generation weight loss shot. It has cleared yet another hurdle, so more on a GLP-1 revolution. But first, we're going to bring in John Tucker to give us an update on the markets here and the latest business news headlines.
And we're lower. S&P 500 down 97 points, 1.3%, at 74.03. The Dow Jones Industrial Average right now 509 points lower. That's down 1%. But most of the action, the NASDAQ down 2.4%, a 621 points sell-off there. Now, if you look at the NASDAQ, 832 stocks there are higher, 2,042 lower. In the S&P 500, break that down. That's almost even. 250 advancers and 253 decliners. You know, it was on the conference call that Alphabet executives disclosed their projection that CapEx would increase again. Actually, before that, the stock was actually up in aftermarket trading yesterday after the results. So that kind of overshadowed the earnings results that we got from the Google parent. And then at Tesla, Elon Musk said on his conference call that this is the year of CapEx. Those guys are spending and spending. Investors, as a result, are skittish, and it is weighing on markets right now. As you look at shares of Google, Alphabet down 7.4%, Tesla close to 14% lower in today's trading. And then also weighing on markets, toss in oil in the mix. You get this sell-off. Brent is up close to 7%, above $100, $100.57 a barrel. Still, Tracy McMillian at Wells Fargo sees markets pushing higher.
This morning, we're seeing a bit of a negative tone because of all that spending, but we believe that through the end of the year, we could see the S&P 500 anywhere from 7,800 to 8,000. So there is still some upside.
Long bond, the 30-year, let me do that, up close to 4 basis points, 4.18%. And I think it's the 28th straight day that we've been above 5% on the 30-year. Twos up 6 basis points at 4.35%. Let's put a price tag on the recent heat wave. I mean, it was particularly bad in Europe, so I'll start there. According to a survey by the London School of Economics, the heat wave that scorched Western and Central Europe in June cost the UK economy $1.5 billion in lost work hours because, everybody stayed home, which was kind of stupid because you don't have air conditioning.
It was worse there. Yeah, it was hot.
You have air conditioning in the offices there.
But the problem is the tube doesn't have air conditioning.
Yes.
So how do you get to work? There's no window in the tube.
No.
Or maybe there is, and you don't want to open that window.
No,
it was the most severe ever recorded in Europe. About 2,700 excess deaths in Wales and England alone. This according to the new research that was just out. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. Stocks are on the move. At least the indexes are to the downside. So let's bring in Avalon Purnell. She is our Bloomberg News equities reporter, and she's got some individual stocks that she wants to tell us about. Avalon.
Yes, Tesla, that's ticker TSLA, currently dropping about 14%, most since last June. And that's after the electric car maker reported a second quarter profit miss and also just had a lot of accelerating CapEx, which is something that we saw in a lot of notes. Morgan Stanley noting that while this CapEx is very much high, it is necessary to become a leader in robotics, though they are also noting that these investments are really going to push the focus on tangible robotaxi and Optimus milestones. Another analyst at Canaccord Genuity writing that the breadcrumbs on the conference call may point to a union with Elon Musk's other company, SpaceX.
That's what I think they're hoping, but SpaceX stock is nothing to write home about as well. All right, what's next?
Alphabet, that's ticker GOOGL, currently falling about 7.5%, most since February. And that's after the parent company of Google's higher capital expenditures fueled fears of the cost of AI development going forward. The increase in CapEx comes as the company's free cash flow, turned negative, amplifying questions about how much does it actually cost to become a hyperscaler. Also worth noting that Alphabet's future spending commitments have now ballooned to $811 billion as of the end of June. That's up nearly $500 billion from just 3 months earlier.
These numbers are bananas.
I know. And it is
you might as well be saying cajillion dollars.
Right, exactly. One more.
Yes, Quest Diagnostics, ticker DGX, currently jumping about 10% to hit a record high. And that's after a healthcare services firm reported stronger than expected second quarter results. It also boosted its profit and revenue forecast for the full year above expectations. Citi noting that continuing strength in the utilization of Quest services, which include like blood tests and diagnostics, are one reason for the beat. And those results are now making Quest one of the biggest gainers on the S&P 500 and are also pushing broader positive sentiment across the sector for other diagnostic companies like LabCorp.
All right. Avalon, thank you so much for giving us the three stocks on your radar. And of course, for more conversations like this, be sure to subscribe to Stock Movers. It's available on Apple Podcasts, Spotify, and anywhere you listen. These are 5-minute audio reports, always available to you at any given time. Let's go back to oil prices because the move here is pretty dramatic. We're now looking at Brent up 7%, Paul, and WTI up 6%. I know it's geopolitics driving this, but it very much feels like the energy market is now looking at a congested Strait of Hormuz, a closed Strait of Hormuz, and perhaps more than just a renewal of fighting in the Middle East. Let's bring in Scott Levine. He is our senior energy services analyst. Scott, how do you look at what's happening here?
It's not good. Basically, we've seen, the real incremental development that we've seen since March when the market started freaking out and the conflict began is the Houthi attack in the West. So one of the major moves that the Saudis made in response to the closure of the Strait of Hormuz then was to start exporting more oil off the West Coast out of Yanbu through using the East-West pipeline. And just this month, we've seen the Houthis attack, and only in recent days, attack a couple of ships in the Red Sea, and that's on the west in Saudi Arabia, and that was the primary plan B, if you will, in terms of getting oil out of Saudi. And Saudi is the biggest producer in the region, and so I think that's giving the market concern that we're entering a second, more accelerated phase here in the conflict. Certainly, things are not slowing down. All the headlines you're seeing suggest things are not moving towards the truce. If anything, they're moving in the other direction, right? And so, if folks were optimistic that some of these Plan Bs would work in reducing the impact on oil markets, we're finding out that's not true.
Scott, I think after weeks and weeks and weeks of all of us studying the Strait of Hormuz and all the maps and how that kind of works, we kind of understand that part of the world. Talk to us about the Red Sea and how easy or difficult would it be for the Houthis to effectively shut that down?
Yeah, I mean, you look at a map and it looks very similar in reverse to what you see looking at a map with a very narrow choke point, which is the Bab el Mandeb Strait there. That's at the southern end of the Red Sea, and Yemen is alongside that and to the south of Saudi Arabia. And so it's, almost analogous to the positioning of Iran near the Strait of Hormuz alongside the choke point. And so, if folks are willing to risk moving ships out of the region there, they're exposing themselves to hostility inherently in what is viewed essentially as an Iranian, not proxy per se, but viewed that way. And certainly the behavior we've seen out of them suggests they are seeing themselves that way as well. And so, there's another artery to the north through the Suez Canal that is significantly more expensive to transit if you're looking to get oil out of the region there, and is magnitudes, more expensive, and probably is not being considered as remotely plausible in terms of a Plan C, if you will. So, the bottom line is that this really suggests that this is maybe a more troublesome situation and that other options need to be investigated in order to get oil to market.
Scott, what does this mean for the U.S. energy complex? Because we talk about how the U.S. is a net oil exporter. The energy sector has done very well when it comes to earnings and when it comes to their businesses the last couple of months. How does this change that, or does it not?
Yeah, it's interesting. I think it does in the long term, and our energy team published a deep dive suggesting that this, could be a structural change on the back of this conflict, and this conflict catalyzed that. But what's interesting is while we have seen the rig counts and the frac counts move up in the last 3 months, earnings season so far has not suggested that it's moved dramatically, and certainly not as much as investors were anticipating. Halliburton saw a 7% sell-off in their stock in response to earnings on Monday. And today we have Liberty Energy, which is one of the top 4 pressure pumping companies. The stock is down nearly 10%. Even though they met expectations, their outlook for the market was cautious. They haven't seen a lot of price improvement, and suggests to us that shale producers are remaining restrained and hesitant in increasing activity levels. So while this has been good for U.S. shale, and we had seen a decline in rig counts the last 3 years, the move up is gradual.
All right, I'm going down there. I'm telling you, I'm going down to the oil patch, get an oil rig.
Yeah, you're going to be a new wildcatter, right?
Yes, $92 a barrel. Scott Levine, thanks so much. Appreciate it. Scott Levine, Senior Energy Services Analyst for Bloomberg Intelligence. Well, our good friends at Blackstone, they reported a 26% jump in second quarter earnings. It was helped by profits from its artificial intelligence-related investments. Earlier, Blackstone President and COO John Gray spoke with Bloomberg's Danny Berger. He told Danny that the power of AI is being underestimated and that AI is creating new revenue streams.
I think fundamentally what people aren't getting is how powerful this technology is at companies. We're beginning to see real-time examples, certainly in customer service, in coding. It's now starting to move to the revenue generation side, where businesses are creating new lines, new revenue streams using this AI. And I think because this tool is so powerful, there's an underestimation of what's happening.
All right, that was Blackstone President and COO John Gray. Speaking with Bloomberg's Danny Berger, another AI bull that's a crowded room. Paul Goldberg joins us, Bloomberg Intelligence Senior Equity Analyst. He covers Blackstone. So there, Mr. Gray, pretty positive on AI and what it may mean for corporate America and for Blackstone. What was your takeaway from Blackstone's results, Paul?
Thanks, Paul, for having me. I think very strong results generally across the board. You mentioned 26% increase in distributable earnings, but it's not just that. It's the 20+% increase in fee-related earnings and so on. There are three drivers that kind of fluctuate from time to time, from quarter to quarter, that drove those. The performance revenues, the fee-related performance revenues, and transaction fees, they fluctuate from quarter to quarter, where base fees were a little bit softer. But net, very strong, broad-based, very strong inflows. They had $68 billion of inflows in the quarter. If you annualize it as a percentage of a gross inflow rate, it's a 21% gross inflow. Obviously, there are some outflows as realizations happen and so on, but there is a very substantial demand from institutional investors, in particular for alternative assets, and Blackstone benefits from it.
Alternative assets also includes private credit. What do we know about the private credit funds that Blackstone has out there? And because there had been a lot of redemption requests, not just for Blackstone's funds, but across the industry.
Certainly. To put this in perspective, out of the $68 billion, about half of it came from the private credit business. So it's still very healthy from the institutional side. And the wealth flows, even though they have been softer and might still be a little bit softer in the second half, but the headlines are receding. You don't have as much pressure. And if you look at the biggest, almost $100 billion private credit fund, the private BDC that Blackstone operates, BCRED, it actually had $1 billion of net flows into the fund. So things are not necessarily falling out of the sky, even though you've seen some of those redemptions, and they might continue a little bit in the second half.
Why are Blackstone, KKR, Cargill, the blue chips out there, why are their stocks down 25% this year?
Well, I think there are several issues that came around with it. Number one, early in the year we had some scare in the software space, right? They were concerned that software is overvalued, that AI is going to take out some of the software businesses, and that worked through the private space because they were heavily invested in software. Blackstone, for example, said today that if you look at it broader, some of the private credit BDCs, they have a heavy 20 to 30% exposure. But if you look at the bigger, large managers in aggregate, Blackstone only mentioned 6% exposure to software. So that's much smaller, but the market reacted to it, trying to figure out. And the other thing were obviously the redemptions from private credit that are sort of tied through the wealth channel to these software concerns.
We have about 30 seconds left, Paul, so just very quickly here. What do Blackstone's results mean for Apollo and Carlyle, which will be reporting in August?
I think they should be very strong. I think there was a lot of inflows. There was a lot of institutional demand. I would also add Goldman, BlackRock, JP Morgan in the mix with their alternative businesses. They were very healthy. Goldman had a record quarter of inflows.
All right, Paul, thanks so much. Appreciate it. As always, Paul Goldberg covering a lot of the financials over there for Bloomberg Intelligence. Blackstone with some solid results. I would think with the better IPO market, the M&A market, there'd be lots of opportunities for these big private credit and private equity companies to monetize some of their assets and get some exits, which is always seems to be the hardest part of the private equity business, exiting at a good way. James Abate, he's going to come up and talk to us about the markets. He's over there, Horizon Investments. That's coming up in just a moment.
Today, it's a Bloomberg News exclusive.
The United Nations is crucial. It's a world of fragmentation, it's a world of tension.
For the first time in 10 years, the United Nations is set for a leadership change.
Trust in the organization is waning.
The candidates for Secretary General debate, live from UN headquarters.
We are stronger when we stand together.
UN Town Hall, the next Secretary General. Today at 5 p.m. Only on Bloomberg 92.9, Bloomberg Television, and the Bloomberg Business app.
Onyx, I keep having stomach issues. Please make me a doctor's appointment.
Okay. Are you suffering from diarrhea, bloating, gas, or oily stools? If so, you may want to ask your doctor if it could actually be a problem with your pancreas, called exocrine pancreatic insufficiency, or EPI.
My pancreas? How is EPI treated?
A prescription medicine like Creon, pancrelipase, is used to treat people who can't digest food normally because their pancreas doesn't make enough enzymes. Creon is the #1 prescribed treatment for EPI.
Creon may increase your chance of fibrosing colonopathy, a rare bowel disorder. Tell your doctor if you have a history of intestinal blockage or scarring or thickening of your bowel wall, if you are allergic to pork, or if you have gout, kidney problems, or worsening of painful swollen joints. Call your doctor if you have any unusual or severe gastrointestinal symptoms or allergic reactions. Take Creon as directed by your doctor, and always with food. Do not chew capsules, as this may cause mouth irritation. Other side effects may include blood sugar changes, gas, dizziness, sore throat, and cough. These are not all the side effects of Creon. You can learn more at 1-800-633-9110.
Before your appointment, visit creoninfo.com. That's CREON info.com.
The entertainment business is changing fast. At Bloomberg Screen Time, we'll bring together the executives, creators, investors, and entrepreneurs shaping what's next in Hollywood, music, sports, and gaming. We'll talk about the biggest stories in media, like the merger of Paramount and Warner Brothers, the booming live events business, and the potential impact of AI. I'm Lucas Shaw, and I'll be hosting Bloomberg Screen Time in Los Angeles September 30th and October 1st. Join us and request your invitation today at bloomberglive.com/screentime/radio.
You know, I used to think all money managers were the same until I spoke with Fisher Investments.
Really? How different are they?
Fisher's investment counselors are dedicated to service, not sales, keeping clients up to date on their portfolio.
Well, they probably just invest in a bunch of mutual funds like I do.
Nope. They build a tailored portfolio based on their clients' personal goals, helping them stay on track for a comfortable retirement.
Well, they must make commissions selling products.
Actually, Fisher doesn't sell any commission-based products. They're a fiduciary, and they believe that's a conflict.
Then they have some kind of complex fee structure.
Nope. Fisher has a simple, transparent fee that's a percentage of their client's portfolio. So they do better when their clients do better.
It sounds like Fisher really is different.
Couldn't have said it better myself.
Fisher Investments. Clearly different wealth management. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
Now, your 3-day weather forecast on Bloomberg 92.9.
Sunny skies for the afternoon, high near 80. Clear tonight will drop to the lower 60s. Sunshine, a few clouds on Friday, highs in the lower to middle 80s. Clear again Friday night, low 60 to 65. Mostly sunny skies Saturday, high in the lower to middle 80s. Sunshine and a few clouds on Sunday, highs will get up into the upper 70s. I'm Scott Kaplan with your weekend forecast on Bloomberg 92.9.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom of this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. A couple of things weighing on risk. Oil jumping, and then, of course, you have the renewed concerns about all the spending by companies on artificial intelligence. Alphabet sinking 7%. They raised their capital spending forecast. Tesla tumbling right now. It is down 14.3%. After they also mentioned capital spending, raising that. And they also had profit that fell after the delivering results after the close of regular trading yesterday. And the rise in oil of what may be a two-front war now for the U.S., also pushing Treasury yields higher ahead of next week's Fed meeting. The two-year yield, 6 basis points higher right now at 4.35. Traders actually see a 30% chance that the Fed next week, the Kevin Warsh Fed, is actually going to raise their benchmark interest rate. Let's go to Armonk, International Business Machines, cutting its full-year sales outlook, including for the software unit. They reported a dip in demand for the mainframe business. The CEO is going to come up any moment. IBM shares ahead of this right now, actually up 0.1%. Overall, the S&P 500 down 109 points. stocks down 1.5%, 73.89 on the index. The Dow Jones Industrial Average is down 608 points. The Nasdaq Composite Index 684 points lower. That's down 2.6%. And again, oil above 100. This is Brent, the international benchmark, $100.88 a barrel is what I'm trying to say. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, John Tucker. Yeah, well above that $100 level. It was kind of flirting there, got there, and then came back, but now we're above that level.
Yeah, that is not bueno.
Not bueno. Okay, let's move on to talk to James Abate. He is a friend of the show, managing director and head of fundamental strategies at Horizon Investments. James, put this all together, what you see today, because we have a risk-off day with stocks, especially growth stocks, deeply in the red. You have yields higher. You have oil elevated. We just talked about 101 a barrel here for Brent. Is this kind of a temporary shock to a confluence of headlines today, or are we at a turning point here?
I think this is, a continuation of the trend that we've seen, and you could take it away from most recent earnings announcements. Let's not forget that if you look at industrials, utilities, other areas of the market, they're actually positive today. So, as we've talked about the last few times on the show, our thesis for the year as active managers was to take advantage of two themes. The first was this generational cash flow transfer from the hyperscalers to the semiconductor and other related downstream recipients was going to continue, as no one, particularly Alphabet, Microsoft, Meta, et cetera, you wanted to be the company, despite now going free cash flow negative, would be the one to throttle down their CapEx and didn't make it to the finish line in generative AI, especially as we're seeing more case studies from, pharmaceutical, chemical, and other service-oriented companies talking about their AI investments and implementations, finally crystallizing a return on investment for themselves. So Alphabet's announced CapEx increase last night kind of confirms that.
So, James, how are you guys at Horizon playing AI these days?
So our things is still going to be picks and shovels. Okay. I think the second point in terms of themes for the year were that most people still underestimated the broad-based industrial investment cycle that's being driven by both cyclical factors like inventory restocking and tax benefits that were in the one big beautiful bill, as well as long-term secular trends. Furthermore, you have to remember the manufacturing recession that lasted between 2020 and 2024, best illustrated by the ISM Manufacturing Index being negative or below 50 for that period of time, forced a lot of those companies in those industries to restructure and right-size themselves. So now, as we have top-line growth picking up, the operating leverage to bottom-line profits is the best we've seen really since the early 2000s. And the potential from this coiled operating leverage is going to be the catalyst, I think, for a strong earnings environment for the foreseeable future. And we've seen it with announced results today from industrial companies in the transportation sector, railroads, truckers, broad-based industrial companies, 3M, other infrastructure companies like pipeline companies and so forth. From an investment's point, it matters because it implies some pretty meaningful runway for incremental revenue and further profit margin. And those disciplining efforts that were in place for a 4-year period are starting to pay off in spades for a lot of these companies. So again, for investors, avoid long-duration, stable growth stocks that work in a PE expansion-led market, right, and embrace cyclicals and commodity-related companies.
To your point, the S&P 500 equal-weighted index is only down 0.5% if you round it up versus the 1.5% drop in the S&P 500 market cap-weighted index. James, how are you thinking about the rise in yields? The rates market has been selling off. The 10-year yield now at 4.7%. The 30-year has been holding above 5% for, I believe, 27 days, something like that, the longest stretch since 2007. What does that mean for the equity market at this juncture?
Well, first off, what it means is that don't look for PE expansion to be the wind at your back. In fact, look at it to be the wind in your face, essentially. So in essence, when you think about stocks, what makes them go up? It's earnings growth, and it's a change in the PE multiple or valuation multiple that people are willing to look at for the market from a systemic basis. I still continue to think that we're basically in a systemic derating of equities as equity risk premiums go up, yields stay high. So you need to, again, sit there and embrace cyclicals and commodity-related companies that have exceptional earnings that can offset that systemic derating. Now, in terms of what the Fed does, despite the recent rise in the two-year note yield, I think, that probably not a great indicator like it usually is of Fed action. I think the Fed's going to keep rates on hold for the foreseeable future. And unfortunately, what we're seeing is, that's leading into pressure in terms of some of the regional bank results with bond position losses as well as just net interest margin. And that's been the one disappointing factor that we've kind of gleaned from the results that have been posted by the banks over the last week as well from an earnings perspective.
All right, James, thank you so much. Really appreciate it. James Abate, Managing Director and Head of Fundamental Strategies at Horizon Investments. Coming up, we're going to hear from Arvind Krishna. He is the CEO of IBM. He's going to be speaking with Bloomberg's Ed Ludlow and Romain Bostic. A little bit of a preview for that. We're going to check in with Anurag Rana. He's a senior tech analyst for Bloomberg Intelligence. He covers IBM, has been covering it for decades here. Anurag, what did the company pre-announced week revenue a couple of weeks ago. Stock took that historic decline. Then they released earnings yesterday or today. What did you hear? Because I see taking guidance down maybe yet again.
Yeah, I mean, the guidance was down based on the full year from what happened. But, one of the things they said was the guidance was only down by about 100 basis points. So that's not like that big of a cut for the full year guidance. And I think that's going to be the biggest question to be asked for the CEO that, right. What makes him so confident that he could achieve an acceleration in the second half.
All right, hang around, Anwar. We're going to go right now to that discussion. We have Mr. Arvind Krishna. He is the CEO of IBM. He's speaking with Bloomberg's Ed Ludlow and Romain Bostic. Let's listen in.
Of the quarter. This was pretty confined to, I'll call it the Fortune 100, the deals that were within a subset of those. Now, 1/3 of what didn't happen has already come back. So that tells us that this was a reprioritization and those deals were very real as opposed to us being optimistic in our projections. And Romain, I would also add, I think that maintaining our free cash flow tells us that we have levers around productivity and conviction and confidence in the business. And that is also, I think, going to serve our investors well. But the next few months will tell us that.
Well, on that cash flow figure, yes, and that certainly pleased a lot of analysts and investors out there, that $1 billion number of projected free cash flow growth, you maintaining the dividend as well. But you're largely done that so far by cutting costs. So that raises the question that if we are anticipating slower growth on the revenue side, does that mean more cost cuts are in store?
The bulk of our cash flow growth over the last 4 years has actually been on adjusted EBITDA. So that tells you that this is mostly through revenue growth. And our model has always been that we are the last dollar is more productive and more profitable than the first dollar. So we've been growing revenue 4-5%, and we've been growing cash flow up in the 7-9%. So that's kind of our model, and we intend to keep maintaining that. Now, right now, if we drop revenue by 1 point, because we said 4 to 5 instead of 5+, we can absolutely make it through productivity. Cost cuts is an interesting question. Cost cuts doesn't always come down to people reduction in headcount. Our headcount has been more or less flat over the last many years. I think there's a lot of third-party spend where we are going to get a lot more efficient with that third-party spend than we have been always.
Bloomberg Tech is live on Bloomberg Television and Bloomberg Radio, and we're speaking with the IBM CEO, Arvind Krishna. Arvind, good morning. You want to focus on accelerating revenue growth and accelerating profitability. And just really simply, I'd love to hear what you're asking the team to do differently now in response to all of the factors that you outlined.
So Ed, really, so if I look at our software business, 80% of it is already an annuity consumption OPEX-based business, 20% of it is a CAPEX business. If we think that the CapEx headwinds are going to continue, but 80% is already growing at about 8%, we want to put a lot more focus. So we're going to direct a lot of the team with forward deployed engineers, with people who are focused on deploying the software at clients, much more technical help, and make that 80% grow even faster. Products like Red Hat, Confluent, Hashi all fit that model. On the CapEx side, we have to make sure that while we can continue to do it, don't depend upon outsized growth on that side to go there. Then on the supply chain, can we leverage all of our capability in supply chain to make sure we have enough distributed infrastructure in storage, in Unix systems, that people can fulfill all of the demand? Because we came out of the second quarter with $500 million of backlog in that part of the portfolio. So those give you an idea of the kind of changes that we're making already, not just for the rest of the half.
You summarized the state of the world beautifully. You said that customers shifted spending towards servers, storage, and memory in late June. And when I posted on social media, you're coming on the show, the question from the audience really simple. Did that trend continue from June into July? And for how long do you expect it to last?
We have not seen it in July, but I would tell you, look, the semiconductor pricing, memory is up, 3 to 4 times over the last 18 months. Networking infrastructure is up 60 to 80%. Fiber is up, connectors are up. I do think that some of these trends on the underlying components are going to carry on for some more time. That works its way up into those things. So people are going to have those prices. Now the question is that going to maintain a reprioritization of the CapEx spend? If I take the signal that a third of our deals closed, then that says no, people are going to get more careful about how they spend their CapEx. If that goes into September, because a lot of CapEx does get committed at the end of a quarter, not always through, then it means that that carries on for some more time. And that is why we gave a guide of 4 to 5%, depending upon if that carries on, we'll be at the low end of the range. But if some of it comes back, then we'll be at the high end of the range.
So Arvind, I know there's a big focus right now on sort of the clients that sort of did not necessarily materialize in the quarter. With regards to the existing clients that you have, and I'm primarily referring to your mainframe business, I mean, can you share like sort of what percentage of those clients are actually increasing their spending? Is that going up still?
Absolutely. So the current machine is called the Z17. The Z17 has been from the beginning, which was May of 2025 to today, at 130% in terms of the capacity growth compared to the prior machine. That's one very strong signal, and that's an aggregate. Then you can say, hey, is everybody in there or only a few? 85% of the clients are increasing their capacity as opposed to the 15 who are not. That optimization goes on all the time. And I would tell you, this is probably the best that we have seen in a long time of what is going on there. Software is going to lag.
Mm-hmm. Yeah, software is going to lag. I mean, look, we know the hardware capacity is there. Software is lag. And I understand why it's lagging in the moment. And I'm going to ask you a question, and forgive me if it's a bit unfair, but I look back to the 1990s and whether there are some parallels to some of the mainframe issues that IBM went through back then under a predecessor 2 or 3 times removed from you, John Akers. And this idea that at that time we were going through this paradigm shift in computing and how companies spent and allocated their money. And there was a lot of talk by the CEO then that the issues were temporary, that they were economic, and that they would right themselves. We know in hindsight that it was much more structural. Why should we now look at this major shift going on with AI and the computation involved in that and think that this time is different?
Well, we have to look at what the clients are doing. I always start there. Our opinion is an opinion. What clients do is what matters. So when I check with my clients, those who do credit card authorizations, are you going to maintain the mainframe? And they go to, well, the resilience, the amount of capacity, the unit cost of it being 5 to 15 times cheaper is important. The big difference from that time, early 1990s to today, Romain, is the cost issue. You could not argue that the mainframe was cheaper on a unit cost basis for the workloads that are moving off than at that time the mid-range computers. I'll call it the whole Unix. It wasn't really client server, it was Unix taking the workloads off in the early 1990s. That issue you have to look at. If there is a cheaper alternate for that workload, I'll sort of look at you and say, that means in 5 to 15 years, it will move off. But that's not the case. Right now, for the workloads that are on, we can show the clients that it's 5 to 15 times cheaper to keep it on the mainframe. They're not, but that's not all workloads. That is workloads that need protection, that need resilience, that need the burst capacity that comes. And so for those kinds of workloads, the mainframe is the architecturally superior platform. That was not the case 30 years ago for the workloads that did go off.
Live on Bloomberg Television and on Bloomberg Radio, this is Bloomberg Tech, speaking with IBM CEO Arvind Krishna. I've been listening to you a lot recently on long-form podcasts, some clips on the social media about your view of the world, what it's like to be a CEO in the domains that IBM operates in. And it's interesting how quickly it comes back to the macroeconomic backdrop. A lot of people looked at the guidance for the balance of this year and would say, and they do say, Arvind, on this show, memory prices are not changing. They continue to push higher. They look at the outlook for growth. Could you just explain the data points you rely on that give you the confidence on the new guidance that you've given and whether it is actually achievable or it will be difficult to meet?
Yeah. So, Ed, I'll come back to, for ourselves, we have to look at our demand pipelines and our yields and how we get things going. But I think for your audience, let's look at it this way. Number one, most important, is what is GDP growth going to be? We think that that's between 2 and 3% for the year if I look at the globe. And it is going to be consistent even in the Middle East, even in Asia, where there is a lot more energy and disruption. We actually see a lot of growth. Tech is going to be, I think, 2 to 3 to 4 points above that. So that puts tech in terms of what the market is somewhere in the 5, 6, 7%. Then that comes back to what parts of our portfolio can play against that demand and what parts cannot. And so I look at the parts of the software portfolio. That's why I talked about the 8% growth in the 80% of it. That can play right into that. Then I look at our distributed infrastructure that can play right into that. I think consulting will be in that 1, 2, 3%. It is not going to be in the double-digit growers. But we see the demand and we see the signings and we see the clients leaning in to say they want transformational work done. That's how we kind of know, right, that beginning with the macro and then coming down. I'll make a prediction for you. I think technology spend is going to become a larger and larger part of every enterprise's budget. It used to be 3% since Romain raised it 30 years ago. It's probably up at 5, 6% on average. I will not be surprised if by 2035 it's 10% of everyone's budget.
Give you a quick micro case study. Bloomberg reported that Starbucks is replacing some IBM tools on the software side with in-house. Yes. Talk to that.
So Starbucks is about a little over $2 million a year client for IBM. The portion they're replacing is a product called Tririga that does real estate lease management. The version of it that Starbucks has is almost 10 years old. I'm not surprised that they're replacing it because I've actually been describing publicly software which is largely interaction-based and is based on ease of use as opposed to anything else can be easily replaced by AI and AI agents, and that is what is going on there. However, if I see other parts of Starbucks and maybe the ability for our Hashi portfolio or security portfolio, how about if I phrase it this way? I would not be surprised if Starbucks is a larger client next year than it was last year.
With regard to how this world is evolving, Arvind, I am curious just internally about your plans to hire, particularly when it comes to the technological side. Have you been able to keep pace with some of the other companies out there also trying to do what you do and pay some of the salaries that you have to pay?
Well, we hired 3 times as many college hires this year than we did last year. And I think that given others seem to be backing off college hiring, it gives us an incredible ability to bring in great talent and to then grow them inside our company and to offer them great careers. I think if I looked at it last, we had, I think, 20 million resumes in our applicant database. So that gives us a huge field to go look at. So, I mean, I don't worry about bringing in talent. I actually worry much more about, can we give them a great career and a great pathway, because not everybody is cut out to do work that is going to be demanded, because I don't think there's a lack of employment, but the nature of the work, if you can't use AI tools, if you can't use the productivity tools, then it's going to be really hard for you to be competitive with your peers.
We already know sort of the potential impact of what AI means for the economy and for your business. There are a lot of people looking around the corner, including yourself, to quantum. Is that a viable business on the horizon, or is that just a moonshot that you're hoping actually sticks?
Well, when things are 2 years away, I wouldn't call them a moonshot. I think quantum is now in the engineering realm as opposed to the science realm for the next 5 years. And I believe that by 2029, we will deliver a machine that does 100 million computations of large-scale, fault-tolerant quantum computer in the next 2 years. I think that's an incredible opportunity. I'll quantify it, and this is not just our work, a lot of third parties. By the end of 2030s, we think it's about $1 trillion total market opportunity in terms of value that quantum will create. That is why we also doubled down this morning and announced that we bought HRL from GM and Boeing, and that's going to help us bring people with a lot of talent around materials, spintronics, quantum sensing, and other sensor technologies to add to our own effort, so we are even more well-positioned to go win in this market.
Arvind Krishna, IBM CEO, of course, alongside Bloomberg's Romain Bostic. Thank you both very much. I would note that IBM shares now modestly higher, 0.3%, having opened.
All right, that was Arvind Krishna. He is the CEO of IBM. He was speaking with Bloomberg's Ed Ludlow and Romain Bostic, saying that Mr. Krishna says infrastructure deals already coming back, and he also says didn't see customer spending shift continue in July. So it's a good route. So I was trying to talk maybe some of the business coming back. Rana rejoins us here. He's a senior technology analyst for Bloomberg Intelligence. Anurag, what you hear in that discussion as it relates to maybe IBM and their book of business going forward? Because again, when they pre-announced several weeks ago, that really shocked the market.
Yeah, so the two big takeaways for us was, one obviously was that the July is turning better and some of the deals are coming back, and that's kind of what we had previewed, because the software that's sold with the mainframe, you just can't discontinue it, you have to buy it, and that's coming back. But the one thing that I would also say is, the macro space is not good. So we are looking out in the second half, and I actually don't know how we can look at consulting remaining at the same amount as it was. Now, I hope I'm wrong in that case, and all of these companies do better. So that's one area. The second thing is important is what he brought it up on Starbucks, and I think this is an incredibly important point, because we're going to hear a lot of news stories around the world about how a company A is replacing an old software. To be honest, that's been going on for years. This is nothing new. When you have an old software, people will replace it with something new. But his comment that it's possible that Starbucks will hit their total cost of spend with IBM may actually go up because of some of the newer products that they have, I think is more critical for the software landscape.
So for IBM, is it, given what we heard from their earnings release plus with their pre-release, is it reasonable to kind of reset the longer-term top-line growth rate for this company lower?
Well, the lower part is, I think, a tough one, because frankly speaking, before we got into any of this stuff, the Iran war and everything, IBM's growth rate on the top all in was somewhere in the range of 5 to 7%. Now, this year, let's say they're going to be between 4 to 5. Next year coming back, they should again be in that 5 to 7% bracket, because they have three different businesses: the software business that grows in high single digit, an infrastructure business over a 3-year period that's about 1 to 2% growth, and then the consulting business, which we don't know when it's going to rebound. So we don't see a massive acceleration in IBM anytime soon unless they get the consulting stuff back on. It's going to be very hard to get to above that 6-7% range for IBM on the top end.
So is that consulting weakness that you cited for IBM, is that an industry-wide issue? I am taking out of my consulting budget and putting it into my AI budget?
Absolutely. And you can see Accenture, which is the market leader, they have had this struggle for almost a little over 2 years. Infosys reported today they had the same issue, and that's plaguing the entire consulting landscape. And not only that, it's also bringing in pricing pressure on contract renewals. So what that does is, for the same kind of work, now you're getting paid the year after. So there's a lot of challenging work over there, and that can only be replaced once you get into a much better macro environment that the spending is good on the non-AI side of it. And once that happens, you can expect consulting growth rates to be above 10%.
So let's just, while we've got you, Microsoft here, we're going to report, I believe, next week here. What's the street looking for with Microsoft?
I think the biggest thing I would want to look for is what's their comments about CapEx, because to be very blunt, they don't have their own chips, and they are going out and buying all the NVIDIA chips in the world. Now, I get that the backlog is strong, but honestly, on a token economics view, I mean, I do not know how they can justify keep on spending more right now, as now I understand why Google is doing it, because they have their own TPUs. I can understand why Amazon is a little more bullish, because their own chip has been under, you could say, acceptance from the clients, but that's not the case for Microsoft. So I'm really curious to see what the CEO, how he frames the CapEx spending for this year and next year.
So do we want them spending more? Do we want Microsoft spending more?
There's a very little likelihood that they will reverse that, but I actually don't want them to spend more. I want them to spend more on expanding the software bucket, which is much more high margin. But, I think I'm in the minority that thinks that, down the road, they will spend a lot less money. Because one of the things you have to remember is they have to spend half their CapEx to go out and buy NVIDIA chips. And I think that's a very, very big number in this market when people are turning more and more to, their custom ASICs chip. For both training and inferencing.
What's the latest thinking on Apple here before we let you go?
Well, the Apple part is going to be an extremely strong quarter because they have not raised the prices on the iPhone 17 base case, which is helping them gain market share in China because their competitors have. So I really want to know, when will they raise the pricing on iPhone? Because if they can find a way to capture margin somewhere else, maybe their services business, then they actually can continue to gain market share into next year as well. I think it's a small likelihood that the rates don't go up by the iPhone 18 family of products, but I think that's the single biggest thing we are looking for when it relates to Apple.
And Apple reports a week from today. Anurag Rana, thank you so much. Appreciate it. Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence, coming to us from Chicago via Zoom. Let's get a reset here of these markets. We'll do a Bloomberg Business Flash with Mr. John Tucker.
All right, again, the major averages, they are selling off. We have the yields higher as Brent crude is rising today. Tesla and Alphabet, the big laggards in the S&P 500. But you know what? You look under the hood, we're seeing a little more balanced picture between losers and gainers in the S&P 500. After their earnings, United Rentals will do that. Best performing stock in the index right now. United Rentals up close to 12.5% right now. And then Lockheed Martin and RTX, after they open their books to investors, they're also some of the leaders in the S&P 500. Jim Caron at Morgan Stanley says any sell-off in the mega cap tech space, that's just a readjustment in price.
Honestly, I mean, look, there's been a lot of expectations. For many of these companies, the earnings have been decent. It's just that they're not beating expectations in the way that maybe, people want them to.
The S&P 500, 107 points lower. That's down 1.4%, 73.91 on the index. The Dow down 555 points. That's down 1%. The Nasdaq Composite Index, 650 points lower. That is down 2.5%. And Brent crude, again, up close to 7%, $100.40 a barrel right now. And in the yield space, this comes, of course, ahead of the Fed meeting next week with Mr. Warsh. 2-year yields up 5 basis points, 4.35%. The 10-year yield up 4 basis points. That is at 4.69%. You also had this earlier headline from President Trump. This is from Axios, actually. Trump says he's close to a decision on massive Iran attack. And, of course, this war has now become something of a two-front war with the rebels from Houthi. Yeah, exactly. So something to keep an eye out for. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Looking at the healthcare space here, Eli Lilly, its next generation weight loss shot has cleared another hurdle. That is just a massive market that continues to show tremendous growth. Madison Muller joins us here. She's a healthcare reporter for Bloomberg News. What's going on Eli Lilly, Madison?
We had an important update from Lilly today about when it plans to file for regulatory approval for its next generation weight loss shot, retatrutide, which is going to be a pretty big product for Lilly if it ends up being approved. Already, there are a lot of people seeking out black market versions of this drug just because they've heard about all of the potentially incredible effects, everything from 30% up to 30% weight loss to liver impacts and all of these other potential health benefits like anti-inflammation and all of these things. So Lilly said that they are going to apply for FDA approval sometime in the first quarter of 2027, which is a little bit later than some analysts had expected, but that's just because the data package and the filing that they have to put together is so big.
So how will this be materially different or better than what's on the market right now? Because people are getting really substantial weight loss, and it seems to be working already. What's this new one going to do?
Yeah, that's exactly right. I mean, Zepbound, which is Lilly's other weight loss shot, and Wegovy, which is a Novo Nordisk product, are really good. And like you said, people are getting a lot of success with those now. Retatrutide, which that's the sort of generic chemical name. It doesn't have a brand name yet because it's not approved. Combines 3 different gut hormones. So it's GLP-1, which we've all heard so much about, plus another one called glucagon and another called GIP. Basically, it just supercharges the drug a little bit. It targets some different receptors and is maybe better for things like removing fat from the liver and other health impacts. And there are a certain percentage of people that don't see success on the currently available GLP-1. So for people that need that higher degree of weight loss, this is something that could be a really good product for them.
Can you explain to me I see the ads all over the place, Serena Williams. How are these? Are they generics? Are they compounds? How are they different from the stuff you have to get a prescription for?
Yeah, well, at one point, a lot of those ads that you were seeing from companies like Roe and Hims and Hers, those were for compounded products. So those are products that are made by compounding pharmacies, and they're not exactly the same as the drugs that the pharmaceutical companies sell. They're not approved or reviewed by the FDA in sort of the same way. But a lot of the telehealth companies have recently moved into selling the brand name medications. They were really pushing the compounded versions when there were supply shortages. Now those supply shortages have ended. They've moved to selling the brand name medications. However, there are still a lot of compounding pharmacies and a lot of smaller telehealth companies that have continued to sell these cheaper compounded ones, even though the FDA has said that that's not allowed anymore.
Interesting. Where are we with the oral dosage? That's in the market now, right?
Yeah, it is, which was a big development this year. Wegovy, there's a Wegovy pill. There's also another pill from Lilly called Foundeo. Both of those are selling really, really well. People are, especially the Wegovy pill has been a huge product for Novo, which is something they really needed. Novo has fallen behind Lilly sort of in the weight loss drug race, even though they were the ones that really created this modern weight loss market with their products Ozempic and Wegovy. Lilly leapfrogged them with some more effective options and also just understanding how to sell products directly to patients and build these sort of telehealth or online infrastructures that were really appealing to patients. So they saw that opportunity and moved into it quickly, helped them sort of surpass Novo. But now Novo's come back with this oral version of Wegovy that's extremely popular. And so that's been helping them as of late. But it sort of remains to be seen in the long run how the pills will end up stacking up to the orals, because we are seeing, to the shots, because we are still seeing a lot of demand for the shots.
So it's almost, who doesn't take a weight loss drug that could, in fact, benefit from a weight loss drug? What are the hurdles still? Is it still cost or availability?
It still is cost in the sense that insurance companies are still not widely covering these, which is pretty different than other chronic conditions. So the insurance landscape is still pretty tough for people, and that can be a barrier if they, I mean, the price when you're paying out of pocket is still a couple $100s a month. So that's still unaffordable for a lot of Americans, especially right now. And we've not seen sort of the same insurance pickup that we would see with other chronic health conditions and that we would sort of expect in this market. So that's been a barrier to entry. And the one positive thing with that is that Medicare recently started covering these drugs for people 65 and older with certain health conditions. So that's sort of expected to open access to potentially millions more people. But it's still like, you know, the number or the percent of people that actually take these drugs that could benefit from them is still pretty low.
Yeah, because I mean, you see somebody out on the street that you would think could benefit, and you wonder why haven't they? Yeah, and I guess it's cost primarily right now is the issue. Do the compounded, are they materially cheaper? The compounds?
At this point, not really. I mean, at one point, yes, because people were paying out of pocket for the list price of the drugs, which was over $1,000 a month. The drug makers have substantially reduced the cash pay costs, so now it's like $200 a month and up, sort of depending on the dose that you're on, which is much, much cheaper. And that's sort of around the same price as these compounded medications, because usually for compounded medications, you're getting them from a telehealth company. So you're paying a subscription fee plus the cost of the drug, ends up being sort of the same.
Gotcha. Madison, thank you so much. Appreciate that. Madison Muller, healthcare reporter for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories, global business headlines are coming up in just a moment. In a market that is selling off, S&P 500, we are down, let's call it 97 points. That's 1.3%. The NASDAQ's off 500, let's call it 600 points, 2.33%. 10-year Treasury yields, they are higher by about 4 basis points, 4.69%. And oil up between 5 and 6% across the board. This is Bloomberg. Good morning.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Programming paid for by Bloomberg. Now, an update from our partners at ABC News.
From ABC News, I'm Michelle Franzen. The U.S. has carried out nearly 2 weeks of airstrikes against Iran, and the Trump administration vowing to keep up the pressure to get Iran back to the negotiating table. Iran, though, not backing down, with maritime traffic stalled or blocked in the Strait of Hormuz, and Iran-backed Houthis in Yemen targeting ships in the Red Sea. Here's ABC's Martha Raddatz.
Iranian-backed militants in Yemen taking aim at 2 Saudi oil tankers in the Red Sea in an attempt to block international shipping, choking another key waterway that could have ripple effects for the world economy.
President Trump is clarifying the nuclear deal signed with Saudi Arabia, saying it's contingent on Saudi Arabia joining the Abraham Accords.
But the Saudis have long said joining the Abraham Accords is contingent on a path to a Palestinian state, and there is no response so far from the Saudis confirming the president's social media post. Less than 24 hours ago, the Energy Department announced Secretary Chris Wright and the Saudi Minister of Energy had signed this landmark nuclear agreement, and it was being transmitted to Congress for review. Karen Travers, ABC News, the White House.
After Bertha made landfall as a tropical storm yesterday east of New Orleans, the storm still trolling the coast and triggering flooding along Gulf states. ABC's Victor Oquendo has more from New Orleans.
The entire Gulf Coast saw some impacts, that coastal flooding in Florida, Alabama, Mississippi. Louisiana's governor calling it a best-case scenario for the state, but still urging residents to stay prepared as we have a long hurricane season ahead.
In Madison, Wisconsin, protests breaking out following a deadly encounter between police and a black man following reports that the man was trying to open car doors in the street. Police say the suspect was armed with a knife and allegedly injured an officer. Here's ABC's Pierre Thomas.
Video circulating online. Officers appear to be wrestling with the man on the ground before 3 shots are fired. The man, who has not yet been identified, later died at the hospital.
You're listening to ABC News.
Now, your 3-day weather forecast on Bloomberg 92.9.
High pressure building in. We'll remain in control of our weather for the rest of the week and into the weekend. Lots of sunshine for the afternoon. Watching a plume of wildfire smoke in New York that may try and make it a little hazy at times through the afternoon. Temperatures will get up to around 80. Clear skies tonight will drop to the lower cities in the city. 50s as you head out into the suburbs. Sunshine, a few afternoon clouds on Friday. Temperatures will get up into the lower 80s. Clear skies Friday night, low in the lower to middle 60s. Mostly sunny skies on Saturday, highs again getting up into the lower to middle 80s. Looking ahead to Sunday, plenty of sunshine, some afternoon clouds. Temperatures will get up into the upper 70s across the region, with humidity levels starting to rise a little bit. I'm Scott Kaplan. That's your Bloomberg Weekend Forecast. Now back to the latest headlines from ABC News.
A former modeling scout who was introducing young women to Jeffrey Epstein has been found dead in his home in Paris. Daniel Siad was named more than 2,000 times in the Epstein files that were released by the Justice Department. ABC's James Hill has been covering the Epstein case for years.
His association with Epstein seemed to have begun after Epstein got out of jail in Florida the first time, back in 2009, 2010. After he had served time for recruiting a minor into prostitution.
Siad was reportedly under investigation in France for alleged trafficking and other sex crimes. A cause of death has not yet been determined. We're getting a new look at the safety of those self-driving robo-taxis from Waymo.
A new study from the Insurance Institute for Highway Safety finds Waymos are involved in nearly 70% fewer crashes compared to human drivers. Researchers noted that Waymos are especially adept at avoiding rear-end crashes, reporting the cars did so at a 91% lower rate than human drivers. The IIHS examined the Google-owned company's operations in San Francisco, Phoenix, Los Angeles, and Austin. Waymo says so far it's served more than 20 million autonomous rides. Mike Dubusky, ABC News.
No winner last night, which means the Mega Millions jackpot keeps getting bigger. Tomorrow night's jackpot will be at least $743 million, the game's 10th largest grand prize. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Speaker Johnson pulls another rabbit out of his hat. But now the real magic will be required. Welcome to the Thursday edition of Balance of Power as the House passes three big bills, a defense policy package, government funding, and a stock trading ban. And they're all heading to the Senate now, where the grind is just starting. We'll get the latest from Bloomberg's Eric Wasson. He's live on Capitol Hill, where they also just passed a War Powers Act. It's being called a defining moment for AI, the hacking of Hugging Face by OpenAI. We're going to explore what really happened there, what it means for AI security when we talk with Miriam Vogel, the CEO of Equal AI, out with new research on the challenges facing companies employing agentic AI. And only in Arizona, think about this, an election denier is nominated to run for governor the same day an emergency physician beats an establishment Democrat to run for Congress. We're going to talk midterms with new polling with our political panel, and it's all after a look at Wall Street. We're having a little trouble today, so we seek the help of Charlie Pellet. He's at World Headquarters in New York. Charlie, what do you have?
Hi, thank you very much, Joe Matthew. Indeed, stocks lower, oil higher, but just want to begin with a development involving trade. U.S. Trade Representative will be making an announcement about tariffs later today. That, according to the White House press secretary, we'll have any developments for you right here on Balance of Power. Stocks lower, as I mentioned, with the S&P right now down 1.3%, 7401 where we stand. 97 points lower on the S&P. The Dow down 527 now, a decline there of 1%. NASDAQ particularly hard hit, down 2.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, lower by 1%. The VIX right now holding below 20, very close to 20. We've got the 10-year 4.69% with the 2-year currently yielding 4.35%. The 30-year now up to 5.17%. Gold is down $81 the ounce to $4,048, drop there of 2%. Crude, major story today, West Texas Intermediate, $92.30 a barrel on WTI, up by 6.3%. This on Middle Eastern tensions. Barrel of Brent above $100 $100.50 now. A barrel of Brent crude up by almost 7%. Russ Kostrich is portfolio manager at BlackRock, and on surveillance this morning, he told us, yes, the economy can handle $100 oil.
The reality is the economy is much less geared to oil than it was at the time of the first Gulf War 36 years ago. It's a smaller percentage of wallet share. We're now the largest oil producer. It's beneficial to the terms of trade. So in terms of the magnitude of the rise you need to see to create a real oil shock that would bring the economy down, I think it's a lot higher than $100 a barrel.
BlackRock's Russ Kostrich, and again, to put Brent in perspective, $100.61 right now. Alphabet lower after earnings. The Google parent raising its capital spending forecast to as much as $205 billion this year. Alphabet shares, they're plunging by 6.6%. Also out with earnings last night, Tesla. Right now, the stock is down 13.1%. We'll hear from Intel after the close today, down by 1.4%. Programming note, coming up, 5 o'clock Wall Street time. For the first time in 10 years, the United Nations is set for a leadership change. Join us at 5 p.m. New York time for a special town hall with candidates seeking to become the next UN Secretary General. Again, we'll have that for you live right here on Bloomberg. I'm Charlie Pellet. That's Joe Matthew. Lots going on. It's a Bloomberg Business Flash.
All right, buddy. Thank you so much. The great Charlie Pellet live in New York. He'll be back in about 15 minutes with more on the markets here as Charlie follows the beat on Wall Street every day for us. And yeah, big stuff coming up, 5 o'clock. If you're in the car, you'll be safe. Keep us either here on Bloomberg Radio or your satellite radio, channel 121. If you're home, dial it up on YouTube. You won't see anything like this town hall coming live from the UN at 5 p.m. Eastern. And I just want you to picture me and Kaylee with our popcorn watching TV at 5. It's not very often we get to do that. So welcome to the Thursday edition. Somehow we made it to Little Friday, and I'm glad you're with us here. With a lot of news to talk about, we're going to get to Capitol Hill in just a moment with Eric Wasson, but we do have news, important news on Iran, and that's why the markets are feeling a little tipsy here. How about it? $100 a barrel oil. Was Bob McNally right? He joined us last evening from Rapidan, suggesting we may well test the highs that we saw earlier in the conflict. $100 right now for Brent, up 6.5%. WTI is at 92. Would have seemed expensive yesterday, up more than 6%. And yeah, stocks are getting clobbered here today, with a few exceptions. It's interesting what we're buying on days like this, as we seek havens, and not just energy, and we're seeing even the integrated oils get back up there. But healthcare seems to pop always on days like these, right? Lilly, J&J, Equivia, McKesson, all moving higher here. Micron is trying. Boy, this has become a pretty interesting story. It's bouncing off the mat today after some tough selling recently, up $31 or 3%. We're nibbling on a couple of things, but someone woke up today with plans to sell Nike. I just find that funny. You're selling Nike now? I'm wondering what this road has been like for you. Defense is popping higher, too, because the Pentagon is asking for a lot more money, and they're going to spend it on a lot of missiles. So you're seeing big bumps today at RTX and Lockheed, which brings us to the war in Iran. The president of the United States now, of course, threatening the Houthis that decided to go for it. We've opened a second front in the Red Sea. Shot at 2 boats, that's how you get $100 a barrel oil. And if you're the president of the United States, you take to Truth Social. He's out there saying a year ago, the U.S. attacked very powerfully the Houthis for their interference with commerce and trade by shooting at ships. Since that time, he says they've acted very responsibly. Unfortunately, now they're starting up again. The point of this, he says, please let this truth serve to represent if they do this again, the U.S. will hold Iran responsible in that the Houthis are a surrogate and or proxy of Iran. He promises major military punishment inflicted upon Iran. And, of course, the Houthis, with now a headline on the terminal from Axios. Trump says he's close to decision on massive Iran attack. So no wonder bonds are selling off. Interest rates are surging along with oil. Stocks are not in a good place, at least for the most part. And we're going to have more on what's happening with Iran as we make our way through the program. But something pretty important just happened on Capitol Hill, and we're going to get into this with Eric Wasson. I wasn't sure we'd be talking war powers, but we are. The House, indeed, calling on the president to stop the war now for a second time. The jailbreak on the Republican side was exactly the same as last time, so not really a jailbreak. There were 4 R's who did this: Thomas Massie, Warren Davidson, Brian Fitzpatrick, Tom Barrett, and I'm sure they'll be hearing about it on Truth Social. The resolution passed 214 to 208, similar to what we saw in June. There's a separate one up there from Seth Moulton and Jason Crow that I believe has, over a dozen co-sponsors? Let's start off with Eric, because they passed a lot of stuff here in the last 24 hours. He is our great congressional correspondent, appropriately in seersucker. It's great to see you, Eric. War powers, not a surprise, I guess. You tell me, because I keep reading this has no teeth. Will it make any difference?
It doesn't have teeth, and more importantly, the president doesn't view it as an important message. You know, in the past, war powers votes that have been successful have sort of been a signal to the president, hey, you need to change course here. In fact, he's ramping up attacks on Iran and saying, really, he doesn't really care about the midterm impact. You know, there's a pair of votes here. We saw a $95 billion Iran war budget move forward yesterday, and we see this War Powers Act with almost all Republicans supporting the president. This is Republicans heading into their August campaign season, really saying that they're behind the president on the Iran war. And Democrats, I just came from a press conference with Hakeem Jeffries, the Democratic leader, and they're making this the centerpiece of their campaign. They're saying, you guys are all on board with this war. It's a disaster. There's no end game. I did ask Hakeem Jeffries how you would end it. He doesn't have an easy answer either. He's just saying that you've got to reconstruct massive diplomacy now that Trump has gotten us into this basically a quagmire.
Boy. Well, let's talk about what was passed. To your point, a couple of important votes here, and they're going to the Senate. The problem is John Thune has a different sequence in mind, right? He says they're not going to deal with reconciliation until the government is funded through this continuing resolution that would keep the lights on past the election. That means the Pentagon's going to have to wait a pretty long time. Eric, and I'll tell you what, I saw our interview. They were playing clips of our interview with Rand Paul on CNN last night as sort of the face of opposition on the Republican side of spending money without offsets. Where's this going to go next door?
That's right. You know, I said on Twitter that Jonathan is putting this reconciliation budget in the same storage area where the Ark and the Raiders of the Lost Ark went. It's going away for a long time. We might see it in the lame duck session. In fact, this is the session after the election in December. Look, senators don't really want to vote on the Iran war budget. They certainly are very, very divided among Republicans between those who want to spend even more. Roger Wicker wants $350 billion for the military, you know, in this plan. And then you've got people like Ron Johnson, who's the newly anointed budget committee chairman, saying they want offsets. But those offsets would be unpopular. Look, even if you are just going after verifiable fraud in entitlements programs, those can easily be politicized by Democrats as cutting entitlements. So, you know, this is a real problem for Thune. He said you can't even get 50 for a budget. So he's putting that aside, looking at the more urgent deadline, which is September 30th for a shutdown, and trying to avoid that, which I think neither side really wants to see. I saw the president out there saying a shutdown is likely. I would tend to disagree and think that Democrats don't really see an advantage in doing that right now, but maybe they'll prove me wrong.
Yeah. I'm going with what Eric Wasson says on that one. The NDAA, this is the Annual Defense Authorization Bill. At one point, it looked like it might be DOA, but it got through the House. What happens next door is a question. This bill includes a number of items like renaming the Department of Defense to Department of War, blocking coverage for gender-affirming care, which is strange because we're doing the high T thing, and I don't know how that plays into it, and making it easier for troops to carry personal firearms on military bases. Are these deal breakers in the Senate?
You know, they might not be deal breakers. Maybe there's something that fuels the compromise. The real problem, though, is the Iran war in the general sense that passing this would be a stamp of approval for Senate Democrats on the Iran war. Yeah. So they've blocked attempts to basically end a filibuster on the defense bill. You know, I think it gets done eventually. There's a long tradition of doing this bill, again, after the election, after people have a sense of where this is all flowing. But, you know, the NDA is, you know, one piece, but if they're going to do an additional $350 billion in defense, there's just people, maybe on both sides, that are like Rand Paul saying, like, come on, this is a 50% increase in the defense budget. Doesn't make a lot of sense. So, you know, this is not going to be resolved anytime soon.
Just quickly, we've got about a minute left. Eric Wasson, is clarity dead, or is it also going to the warehouse in Raiders of the Lost Ark?
I think it's in deep trouble. There's an ethics provision in here that basically would prevent the president and others from issuing new cryptocurrency, but it basically green lights the existing cryptocurrency that the Trump company has been involved in. That's a real non-starter for Democrats. They think it's written with loopholes on the ethics side. So they came out and panicked. We were looking at people like Raphael Warnock and others who were potential swing votes, and when they said that they're not on board, that makes me think this is also going on ice. I believe there'll be a vote. Certainly a big push from the crypto lobby to have a vote and let people know where they stand next week, but I don't see it passing.
Great reporting, Eric. You've had a heck of a week. Eric Wasson, Bloomberg News congressional correspondent. There's a lot of bills there in old Hangar 51. We'll see if clarity finds some company. I'm Joe Matthew in Washington. We turn to AI and the hacking of Hugging Face. Miriam Vogel joins us next, only here on Bloomberg. Make sure to subscribe to the Balance of Power podcast. In the meantime, get to Apple, Spotify, wherever you get your podcasts. Watch us live on YouTube and listen anytime at our website. It's Bloomberg.com.
Today, it's a Bloomberg News exclusive.
The United Nations is crucial. It's a world of fragmentation, it's a world of tension.
For the first time in 10 years, the United Nations is set for a leadership change.
Trust in the organization is waning.
The candidates for Secretary General debate, live from UN headquarters.
We are stronger when we stand together.
UN Town Hall, the next Secretary General. Today at 5 p.m. Only on Bloomberg 92.9, Bloomberg Television, and the Bloomberg Business app.
With the Bloomberg Small Business Report, I'm John Tucker. For a small business, hiring a qualified employee is hard enough. Now it's getting even more challenging, and you could blame artificial intelligence. Mediocre applicants are using AI to burnish their resumes and even generate false references. In response, more companies have been secretly contacting backdoor references, current and former colleagues who haven't been coached to say nice things about the applicant. This controversial practice, once confined to high-level hires, has spread to entry-level jobs. Finding backdoor references actually has its roots in the early 1800s. Back then, a firm called the Mercantile Agency started the practice of hiring a network of agents in cities and towns throughout the country to supply confidential information about the character of everyone doing business in their community. The Mercantile Agency would later become Dun & Bradstreet. And that's the Bloomberg Small Business Report.
Hi, how can I help? Well, my husband and I feel like we've outgrown our current money manager. I see. Our lives have changed, and we need something more than just mutual funds to help us in retirement.
She's right.
I hear that often. At Fisher Investments, we'd start by getting to know you, your finances, family, health, lifestyle. We tailor a portfolio around your goals and needs.
Sounds good.
Can you help with estate planning? Yes. We have a team of specialists who can help you with estate planning, Social Security, investment income, and more. We'll get to know your whole financial picture and help keep you on the path to a comfortable retirement.
And your fees?
We have a simple, transparent fee that's a percentage of the value of your portfolio. So we do better when you do better. I feel better already. At Fisher Investments, we're clearly different. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
Now, your 3-day weather forecast on Bloomberg 92.9.
Sunny skies this afternoon, high around 80. Clear tonight, low in the lower 60s, 50s in the suburbs. Mostly sunny Friday, high in the lower to middle 80s. Clear Friday night would drop to the lower to middle 60s. Sunshine and a few clouds Saturday, high 80 to 85. A mix of sunshine and clouds on Sunday, highs will get up into the upper 70s. I'm Scott Kaplan with your weekend forecast on Bloomberg 92.9.
The news doesn't stop on the weekends, and now neither do we. This is David Gura. Join us on Bloomberg This Weekend. Watch and listen to the news show Saturdays and Sundays starting at 7 a.m. on Bloomberg Radio, TV, and the Bloomberg Business app.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got oil holding above $100 a barrel. Brent crude $100.17 now. It is surging 6.5%. West Texas Intermediate crude right around 92 a barrel, up now by 5.9%. That surge in oil spurred by the escalating Iran war, sending stocks and bonds lower. S&P right now down 84, drop there of 1.1%. We've got the Dow down 436, drop there of 0.8%. NASDAQ and the NASDAQ 100 index also lower. They're being rattled by earnings last night out of Alphabet and Tesla. We'll hear from Intel after the bell today. Right now, NASDAQ is down 2.1%. The NASDAQ 100 index down 1.7%. The Bloomberg Mag 7 index down 4.5%, with the stocks, the Philadelphia Stock Exchange Semiconductor Index down 0.7%. And the VIX, Wall Street's so-called fear gauge, holding just above 19. The 10-year, 4.69% right now, with a 2-year, 4.35%, and the 30-year, 5.17%. Spot gold, $4,050 the ounce, down 1.9%. And again, worth repeating on crude, WTI up 5.9%, $91.94 a barrel. Brent, $100.20 now, up 6.5%. We're seeing oil majors rally today. ExxonMobil up 2%, Chevron up 1.7%, ConocoPhillips up 2.4%. Higher energy hurting airlines in the latest reports. We do have shares of United moving lower, down by 3%. This after earnings from American Airlines Group. American down 7.7%, Delta down 2.8%. Also reporting Southwest Airlines, Southwest down by 4.7%. Recapping, stocks lower, S&P down 1.1%, crude oil surging, a barrel of WTI now up by 5.9%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. She'll be back coming up in about 20 minutes' time. The voice of Wall Street and the New York subway with us every day here. How lucky are we on Balance of Power with the great Charlie Pellet? Even when the news is bad, we kind of want to hear it from Charlie, don't we? Boy, Alphabet really changed everyone's mood, huh? I thought this was going to be the report that brought us back to optimism when it comes to AI, but the hyperscalers are falling hard. There is an interesting reciprocal, though, as AI infrastructure names seem to be doing well, right? Because Apple's spending too much. That money's got to go somewhere. We'll be tracking the markets throughout the day here as we keep our eyes on something really important that happened this week. And there is a political side to all of this that we're going to get to. But I'm hearing words like watershed moment, inflection point, unprecedented. The hacking I'm talking about of Hugging Face. You've seen the story by now, and we talked about it here on the program. This is ChatGPT 5.6, which you may or may not be using. I'm guessing not. This is the new fancy one until the next one comes out. Its models were asked, this is a test that went wrong. They broke out of the sandbox, as you keep hearing. What does any of this mean? They were testing this model to solve a hacking challenge during pre-deployment at Hugging Face. The models decided on their own to break out of the so-called sandbox, this walled environment they're being tested in, and try to figure it out on their own. They figured Hugging Face might have the answers. They used stolen credentials to break into this thing without anybody telling it to. So that freaked out a lot of people. This is the kind of stuff that the CEO of Anthropic likes to talk about, right? Dario Amodei. And in fact, the head of Anthropic's Frontier Red team, which sounds scary, Logan Graham, said he told his team to, quote, remember this moment as the first true AI safety incident. Little less extreme. The boss at Hugging Face, the CEO, called it an attack unlike anything we've seen before. So what's going on here? The White House is supposed to be testing these models before they're out in the general public, right? We've talked a lot about the posture that the administration has taken here. And there's a new AI protection bill that Ted Lieu's got up on the Capitol right now. They just can't seem to get anything off the launch pad when it comes to regulations here in Washington. Should this be scary? Should this be exciting? Or is it just another stop on the road to the next DeepSeek moment? I don't even know if I have the right questions, but I know someone who has the answers, and I'm really excited to say that Miriam Vogel is back with us. I told you she was coming in today. An important voice in all of this, and I think we can characterize her as an optimist, but also helps to reset our clock. When the narrative gets to be a little bit too dark around an emerging revolutionary technology. She's the president and CEO of Equal AI and first joined us to talk about her book, Governing the Machine, How to Navigate the Risks of AI and Unlock Its True Potential. They're also out with a new white paper that we're going to talk about on the challenges that companies are facing in adopting AI. It's great to have you back with us in studio. Welcome back to Bloomberg.
Thanks so much for having me.
I don't know if I even described this properly because even I don't claim to understand what happened here. The fact is, though, you've got models who are acting on their own without prompts, apparently, and breaking out of the sandbox. Is this, in fact, a watershed moment?
This is a wake-up call. I would say 2 takeaways we all should think about here. First of all, we should not be surprised. We've been told for years that an algorithm will do exactly what it's told to do. There's a pleaser issue. It will not question or judge. It doesn't have judgment. It doesn't have context.
Yeah.
It will achieve the end goals that it is mandated to do.
A pleaser issue because it's been told to satisfy whoever's in charge of this model.
At all costs.
Okay.
And so what we need to do, the second point, is urgently act to put in guardrails. What are guardrails? What is governance? It's adding the judgment, the context, the end goal of human safety as one of the priorities that needs to be taken into account when it achieves this end goal, whatever that end goal is in any algorithm ever.
Wow. All right. So does a wake-up call present something we should be scared of or an opportunity to fix a vulnerability before it's unleashed on the
That's a great question, Joe. This is an opportunity. As you mentioned, we have this white paper just released. It's based on a summit we had very recently with leading deployers of what's called agentic AI. And that's what moment we're in now. This is not a future sci-fi scenario. Right now, 50% of leading companies are using agentic AI. And what does that mean? They are AI systems that operate to achieve a task. So as opposed to just summarizing an email or a report.
This has a specific job.
And it will operate across a system. It will achieve an end goal of planning a trip, of operationalizing and increasing efficiency in a workflow. It will take multiple steps with limited to no human involvement. And so that means we have to be especially careful. And what we found at our summit is there's an urgency to make sure there's clarity on what is governance that we expect of all AI systems, particularly now as we're going into agentic AI and we're increasingly removing humans from the equation. We need to understand exactly what we're asking these AI systems to do and make sure it has the context to understand, to prioritize human and society in each of these end goals.
This is lofty stuff. When you say governance, is this a self-policing situation right now, or are you suggesting the government needs to create regulations?
I think governance needs to be a multifaceted approach. It needs to be something, I think of it as an umbrella or a wheel where there are multiple spokes, there's multiple pieces of it. Government has a role for sure, but a lot of what happens when we're talking about AI system has to happen inside the organization. You can't regulate your way out of this. Now, government and other organizations can be helpful in clarifying the end goals, because right now I have the privilege of working with organizations that are all prioritizing AI governance. They want to make sure that their outputs are safe and benefit society, but they are figuring out on their own in silos what those best practices are, and that's not where we want to be. We have this summit to align on the best practices so they can learn from one another, but we want to make sure everybody understands what these best practices are.
So these 100 companies you put in a room to create this white paper are already using AI, want to be using AI, or a combination?
They're all deep in agentic AI.
They're deep already. Okay, so they have embraced this as something that will make them more productive, more efficient. How many people were afraid of what could happen versus excited for what could happen?
It's a great question. I would say people are doing this work because they are hopeful at what the outcomes will be, but they are all very intentional in needing to put in the safeguards urgently, immediately, that they put in on their own systems across society. So a lot of our work was, what does a company need to have in place today to make sure they are clear on what their outputs are, to make sure they're not creating harm and risks? But there's also a societal piece. We need to make sure that there's alignment. And the place that we see that the most is in this distrust that the general public in the U.S. feels towards AI. It is because we don't have governance in place across the society. We don't have expectations of what should AI be doing, what should it not be doing, and how do I use it safely?
Things have been getting pretty dark recently. Data center moratorium in New York. People are talking about their bills going up. Republicans in some cases. The populist movement on both sides of the aisle are kind of lining up against this. It's even getting a thumbs down right now on Wall Street. How did we get to this point? Is this sort of an equal opposite reaction to the euphoria we were feeling around NVIDIA's visit, Jensen Huang's speech here in Washington a year ago?
Again, I think this is to be expected.
Yeah.
If you told people in the early 1800s to get in an elevator without ensuring that they would be safe when they got to the top floor, they would not put themselves in it. They wouldn't sit in an airplane. They wouldn't entrust their children in a car if they did not know there were safety protocols, that the brakes would be working, that there's an odometer, so you know how fast you're going, and so that you can speed up. Without these governance structures in place, people don't have reason to trust systems. So the more we can be talking about what smart companies are doing to build this trust, deserve this trust, the better off we all are.
I learned about the Tahiti problem from your study here. Participants offered the illustration of hundreds of agents simultaneously calling a small resort in Tahiti to make reservations, which could flood the resort's human-paced systems to the point of failure. Does everyone have the Tahiti problem in this collection of companies you talked to? And is this the reason why they adopted AI to begin with?
It's such a good question. What is the end goal? How does this play out when we have the machines versus the human systems we have in place? We came across many challenges we're going to confront. One, as you said, the Tahiti problem. A huge problem is data. You know, if agentic systems are operating, what are they operating on? The data that they're training and operating off of. So we need to make sure that there's context, that it's not the slop that is out there, that we have privacy protections in place. We talked about really interesting questions like consent. You know, when you're authorizing this agent to take actions on your behalf, how do we maintain what that consent you gave as the use changes, as the context change? It's going to be operating often with other agents across a system of operations. So you want to make sure that it's clear on what you've given authority for it to do. So visibility into how you're using AI is an absolute must in governance. Authority, accountability. Who is accountable at the end of the day in the C-suite for these operations and across the line to make sure that these tests that we've just seen that have gone off the guardrails are certain that there's authority, there's accountability in place.
Someday I want to do an hour with you. In our 30 seconds remaining here, remember when you talked about the J space last time you came on? Are we at the point now where we actually do not fully understand the technology we made?
There are many questions, to be sure. And the developers themselves will tell you there are open questions. What we do know is that the best practices in AI governance, the 5 best practices that we talked about 7 years ago, remain the best practices today.
You can't hear the music's playing. I'm going to get the hook. I'm so glad you came by. I told you would get something out of this. Miriam Vogel, Equal AI. Thank you as always. This is Bloomberg.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Michelle Franzen. As the U.S. and Iran war escalates, the Trump administration announced a new nuclear deal with Saudi Arabia. President Trump, though, today says it's contingent on Saudi Arabia joining the Abraham Accords. ABC's Stephen Portnoy has more.
Saudi Arabia has been reticent to join this arrangement, in part because it is insistent that there be a Palestinian state. The president this morning made this statement, and his press secretary at the briefing said that it is the final word on this. That the president is ultimately the deal maker in this, and that the deal is contingent on this condition the president announced this morning as far as Trump is concerned, and that if they don't agree to it, Caroline Levitt says the deal is off.
The Southeast and Mid-Atlantic states under flood alerts. Nonstop rain in North Carolina and Virginia could stretch into the weekend. And neighborhoods in West Virginia flooded from severe storms earlier this week. Remnants of Bertha triggering flooding in Gulf Coast states. This is ABC News.
Why wait through boring and irrelevant topics on AM radio
when you can listen to Bloomberg 92.9 FM for stories that matter? Breaking global news and the context you need. Bloomberg 92.9. Faster, smarter, better.
Onyx, I keep having stomach issues. Please make me a doctor's appointment.
Okay, are you suffering from diarrhea, bloating, gas, or oily stools? If so, you may want to ask your doctor if it could actually be a problem with your pancreas, called exocrine pancreatic insufficiency, or EPI.
My pancreas? How is EPI treated?
A prescription medicine like Creon, pancrelipase, is used to treat people who can't digest food normally because their pancreas doesn't make enough enzymes. Creon is the #1 prescribed treatment for EPI.
Creon may increase your chance of fibrosing colonopathy, a rare bowel disorder. Tell your doctor if you have a history of intestinal blockage or scarring or thickening of your bowel wall, if you are allergic to pork, or if you have gout, kidney problems, or worsening of painful swollen joints. Call your doctor if you have any unusual or severe gastrointestinal symptoms or allergic reactions. Take Creon as directed by your doctor, and always with food. Do not chew capsules, as this may cause mouth irritation. Other side effects may include blood sugar changes, gas, dizziness, sore throat, and cough. These are not all the side effects of Creon. You can learn more at 1-800-633-9110.
Before your appointment, visit creoninfo.com. That's CREON info.com.
Hi, Jose Minchero here, Head of Portfolio Analytics Research at Bloomberg. Are you looking for a risk model that adapts quickly to today's volatile markets? One capable of providing accurate risk forecasts and efficient optimized portfolios, all while mitigating those pesky correlations between idiosyncratic and factor returns? If so, look no further than the Bloomberg MAC 3 risk model. Visit bloomberg.com/risk-modeling to learn more.
On a recent edition of the Odd Lots podcast, Joe Weisenthal and Tracy Alloway speak with Boris Cherney, the head of Claude Code at Anthropic, on the hottest piece of software in the world.
How much do you think the explosion in 2026 from your seat is, okay, this harness has taken hold, and a bunch of people like me that's like, oh, this is incredibly powerful to have a computer that lives on my computer, versus the advances in the model, Opus 4.5, 4.6 getting really good? Which was the thing that you saw catalyze this explosion more crisply?
Oh, it's almost all the model.
Interesting.
Yeah, the models improved so much. And, we saw this, back in November, like you said, Opus 4.5 came out. And, for Quad Code, we've seen a few inflection points.
Okay.
It was very clear. Opus 4, that was May of last year. That was Opus and Sonnet 4. Our growth inflected. Mm-hmm. Opus 4.5 in November, our growth inflected, and then Opus 4.6 in February, our growth inflected again, now Fable. So we kind of see these inflection points, and we saw this in Claude Code's growth. But the thing about Claude Code is we are built on the same exact infrastructure that our customers use. This is by design, because for Anthropic, we build products, but we also build a platform that other developers build on, and many, many thousands of companies build on our platform. And so when you look at Claude Code, we use the same public model that everyone does. We use the same exact public Anthropic API that everyone does. We don't have some secret API that we use. We use the same exact API. And we call this dogfooding, right? Like the idea is like you build a product, you got to use your own product because that helps you make it a lot better. And this is the way that we build Claude Code. And so when the model got better, we benefited from this on the Claude Code side because we, use the model through the Anthropic API, and a lot of our customers saw the same thing. They saw a lot of the same growth for the same reason.
That's what's on a recent edition of the Odd Lots podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got oil higher, stocks trading lower. We're off session lows, but still looking at a 1% drop on the S&P 500 index. Yes, a bounce off the bottom, but right now down 76 points. The S&P at 74.19. Dow Industrials down 445 on the Dow. A decline right now of 0.8%. Tech hit hard today with the NASDAQ 100 index down 1.5%. The NASDAQ Composite Index down almost 2%. The Bloomberg Mag 7 Index is down 4.6%. Alphabet shares down 6.5%. Tesla after earnings as well, down by 13.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, just turning higher, back in the green, up under 0.1%. 10-year at 4.69%, with the 2-year 4.34%, the 30-year 5.16%. Gold down almost 2% to $4,050. A major move in crude oil. West Texas Intermediate $92.45 a barrel, up 6.5% right now. Barrel of Brent back above $100, up now by 7%. Energy traders do remain focused on the Strait of Hormuz, but with the Yemen-based Houthis claiming attacks on 2 Saudi oil tankers, attention is now shifting to the Red Sea. Jonathan Lieber is head of research at Eurasia Group. He was interviewed this morning on surveillance.
Over time, we think that obviously you're going to see a lot of displacement of energy shipping and other shipping out of the Strait of Hormuz. That's going to evolve over the next 5 years or so. And the Red Sea is going to become an increasingly important choke point in the global oil trade. And this week, what we're seeing is what that means is that choke point is not a safe choke point. It's one that the Houthis or other geopolitical risks could potentially affect as well.
Jonathan Lieber of Eurasia Group interviewed this morning on surveillance. Bottom line, crude holding above $100 a barrel. Brent up now by 6.9%. While a lot of tech names are lower, defense names higher after earnings. Lockheed Martin and RTX raising their full-year sales forecast as geopolitical tensions around the world boosted defense spending. Lockheed Martin now surging by 11%. They're based in Bethesda. And shares of RTX out of Arlington, Virginia right now, we do have RTX up by 7.6%. For the first time in 10 years, the United Nations is set for a leadership change. Join us at 5 p.m. Eastern for a special town hall with the candidates seeking to become the next UN Secretary General. They'll be discussing their priorities, and we'll have that for you live right here on Bloomberg. Recapping, stocks lower, tech hit hard, oil higher, S&P down 1.1%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you, my friend. He'll be back 1 o'clock Eastern time, top of the hour, about 20 minutes away, even less than that, as we watch Wall Street throughout the day here in a trade that's clearly being impacted by the war in Iran. Charlie just gave you the numbers here. You can't deny the sentiment as the president hits the gas, threatening the Houthi rebels and Iran with far more intense attacks as we consider a new front here in the Red Sea. We've got 2 choke points now to worry about. Welcome back to $100 a barrel oil. That is our reality here for Brent. We're in the 90s, 92 for WTI. Interest rates are up because people are dumping bonds, and they're selling a lot of stocks, too. No thanks to Alphabet. Coming off our conversation with Miriam Vogel, the whole AI trade is mixed up today. It's not feeling good. With the president threatening to step up strikes on Iran, saying he will hold the country responsible for any further attacks by the Houthis, or the Houthis, depending on who you ask. Now, I'm going to add a couple of more numbers here. You heard $100 a barrel oil, mighty $2 a barrel WTI. How about $4.09 for a national average when you're buying a gallon of gas? In Arizona, it's $4.30. We're going to be talking about primary results in Arizona, which are also a little confusing, certainly the state self-contradicting. But there's some new polling data that before we assemble our political panel, I want you to hear about. This is the baseline before the news of the past 24 hours. Okay, let's start with Emerson. They've got a great polling outfit there, as you've heard, with an 11-point generic ballot advantage for Democrats. This is maybe an outlier, but I'm giving you the facts as we know them. This survey of likely 2026 voters, okay, this isn't registered, this is likely, give Democrats an 11-point advantage over the Republicans on the generic ballot. We've got Fox reporting as well on its research. 53% of voters, if the election were held today, would back the Democratic candidate in their House district. 53. And 46% Republican, a 7-point edge just outside the poll's margin of error. Now, we will get into the results here. They just called one of the races we were waiting for in Arizona. But I want to get to these numbers first with our political panel. Bloomberg Politics contributor Jeannie Sheehan Zaino is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. And great to have John Seaton back, Republican strategist, founder, and CEO of Echo Canyon Consulting, which, John, always makes me feel like I'm about to crack open a bottle of wine. It's great to see both of you. John, how are you feeling about these numbers here? You know, we hear typically that history is stacked against the party that's running the House, Senate, and the White House, but a 53% generic ballot advantage for Democrats, an 11-point spread. Do you buy those numbers?
Yeah, I think that maybe a bit of an outlier, as you mentioned, and it's always a challenge in the midterm year with the party in power, and in this case, party also in control of the White House and both houses of Congress. It's usually a challenge with the exception of 2002, right after 9/11. I will note, though, that before Democrats start popping champagne corks, they really should look at other numbers within those polls that show the favorability of the Democratic Party is very, very low as well. I just looked at the Real Clear Politics numbers, and I think the Democratic Party is minus 17 in that respect. So voters are clearly unhappy, but they haven't yet fully made the jump to the Democratic Party. The Democrats haven't yet sealed the deal.
I don't think Jeannie Sheehan Zaino even drinks champagne, but she is a pollster. Jeannie, I don't know if you want to pop a cork or something here, but what do you make of these numbers? Does an 11-point edge sound real right now?
I do agree that it is an outlier, I think, at this point. And some of this is going to depend on what happens in Michigan and Wisconsin. I don't think we can deny for the Democrats the issue of which candidates are chosen in these very contentious primaries. So that's a big issue for Democrats. Overall, though, these are good numbers for Democrats. And Joe Matthew, I'm going to quote Brett Hume, there's not much good news in this poll for Republicans, he said about the Fox poll. They are underwater on the economy. They're underwater on affordability. They're even underwater on immigration. Those are the key things the president ran on. And one would think that the president would be out there. He'd be in Georgia. He'd be killing it on the stump, trying to get those numbers up. And instead, what did we hear yesterday? Affordability is a hoax. It's a Democratic construction. The war is not a war. It's a skirmish. It's incredibly popular. So the president is doing nothing to help these poor Republicans. That's why I think they are skedaddling from D.C. as fast as they can to get back home and to try to resurrect, particularly in these purple districts, what's going to be a really, really tough year for this party.
Well, let's get into some races because we've got a few to talk about here. And we shouldn't look any further than Amish Shah at the moment, at least. This is another said to be knock on the Democratic establishment. An emergency physician beating the establishment candidate here and will face Republican Jay Feely, Jeannie, a former NFL kicker. What do you make of this race and what it means for the Democratic establishment in Arizona?
Yeah, I mean, this is what we're seeing over and over again. We're seeing it in New York. We're seeing it in Arizona, Wisconsin, Michigan, other states. It's like a food fight amongst the Democrats. We're seeing some of that on the Republican side. And I think there's a lot of concern amongst Democrats that they are going to walk themselves away from what could be a potentially good year, depending on how these candidates play in the general election. It's a real concern, and it's a valid concern. You know, I just go back to Maine, Joe. You look at it and you look at somebody who, in Graham Plattner, forgetting all of the other horrific things that he was accused of doing, he was literally running against the Democratic Party. That's what he was doing. And that's what resonated with so many Maine voters. So I think the pressure is really on the Democratic moderates, the party, to make a case for the Democratic Party. They haven't been able to do that yet. And I would just look at Kim in New Jersey talking about Medicare for all kids, Medicaid. This is a really popular, a great idea. We need to be offering those kinds of solutions, not just running against Donald Trump. Otherwise, the DSA candidates will run away with this, and we will have trouble in the general then.
We should note that Marlene Galan Woods, that was the DCCC-backed candidate, lost by 5 points. John Seaton is actually an expert in Arizona politics. He spent a lot of time managing campaigns there, and I'm wondering your thoughts on all of this, John, and also what's with the New York Jets in Arizona? Shaw's going to face Jay Feely, and I read in the AP today, they were both Jets. Shaw was also a team doctor. Is this some sort of narrative we should be paying attention to?
I mean, that's the 6 degrees of separation, maybe the 6 degrees of Jay Feely. Yeah, it's very, very interesting.
Fair enough.
Tidbit. But I think the broader point here, and I'm in Arizona right now. It's a dry heat. Arizonans don't like being told what to do, and I think more and more people are very skeptical of advice coming from Washington. And so I think I personally was a little bit surprised that the DCCC tried to put their thumb on the scale for Marlene Woods. I was a little bit surprised by that. I was not terribly surprised that Dr. Shaw came away as the Democratic nominee. Again, Arizonans are extremely independent. My old boss, John McCain, was the original Maverick. And Arizonans really don't like being told what to do. And when popularity of Washington, D.C. is really, it feels like an all-time low, you can almost run solely against Washington and do pretty well in some of these races. So it'll be a fascinating general election with two former Jets here in the desert. But yeah, I wasn't terribly surprised by the primary result.
Well, check this out for the general in the race for governor. Jeannie, you saw this one coming, and we talked about it the other day. Andy Biggs won. So you've got an election denier, Freedom Caucus member, running against Katie Hobbs, who used to be Secretary of State. Does it get richer than this?
No, it does not. And not only did Biggs win, not only did Colladone win in the Secretary of State race, but they ran away with it, Joe. I think the AP called these races, within an hour of poll closing. This was not a tough race on either side. And they are both election deniers. And this allows, as John was just talking about, a big question to arise in terms of where do the more moderate and independent voters go? And this is what has Republicans in Arizona concerned, because as we have seen, Donald Trump is something of an outlier. He can win and win handily in a state like Arizona, but they haven't been as successful with other MAGA right candidates. So I think a lot of pressure on Turning Point to turn out the vote. And also, you've got Katie Hobbs there, and she's known, I think now, Joe, as the veto queen. She has vetoed more than 500 pieces of legislation. I didn't make that up either, Joe. And that is what moderates and independents want sometimes. They want this countervailing force to stop this more MAGA right focus on a lot of these election bills, et cetera, coming from the Republican legislature. So she's going to have a leg up there, but it's going to be a tough race. She's incredibly vulnerable. And we see Biggs running as fast as he can to the center, knowing what happened to other folks in the last few years who didn't make that turn.
Well, it didn't work out real well for Kari Lake. John, you know the lay of the land. Could Andy Biggs win this election? And if he does, what does that say about the Republican Party in Arizona right now?
He absolutely could win this election. It's always hard to defeat an incumbent governor, but one thing that Congressman Biggs did very effectively was kind of unify the party early on in the process. He won by a huge margin, as Jeannie points out. That doesn't happen in Republican politics here all that often. Usually we have pretty bruising, ugly primaries. In this particular case, Congressman Biggs was able to start running to a more bipartisan approach in the primary. That very rarely happens. So I do think that he has a chance. I think it's a center-right state. I don't think you'll hear him talk a whole lot about the 2020 election. I think you'll hear him talk about kitchen table issues, about affordability. I think he will take the fight directly to Governor Hobbs. I'd say she's slightly favored right now, but I think it's going to be a fascinating race and extremely close.
It sure is, and I'm guessing pretty expensive as well. We've got a great panel for you today, and they're going to be back in our second hour. John Seaton and Jeannie Shanzano, thank you both. We'll have much more to talk about on the other side as we welcome our global television audience to the conversation. And what a lineup here. It's another parade of senators from the Republican side of the aisle after everything that passed the House last evening. We'll take the temperature of Senator Ted Budd, North Carolina, Senator Todd Young of Indiana on what they plan to do with this legislation. And guess what? what? The stock trading ban passed the House. We'll talk with the author, Brian Stile of Wisconsin, all next on Bloomberg. And make sure to watch the Balance of Power podcast on YouTube. While you're at it, subscribe to the podcast on Apple, Spotify, or wherever you get your podcasts. Listen anytime at Bloomberg.com.
Now, your 3-day weather forecast on Bloomberg 92.9.
Sunny skies for the afternoon, high near 80. Clear tonight will drop to the lower 60s. Sunshine, a few clouds on Friday, highs in the lower to middle 80s. Clear again Friday night, low 60 to 65. Mostly sunny skies Saturday, high in the lower to middle 80s. Sunshine and a few clouds on Sunday, highs will get up into the upper 70s. I'm Scott Kaplan with your weekend forecast on Bloomberg 92.9.
Big Tech reports earnings.
Alphabet earnings now crossing the wire.
Second quarter revenue coming in ahead of estimates.
The company is raising its capital spending forecast.
And Bloomberg brings you the headlines first.
Tesla, second quarter adjusted earnings coming in below estimates.
Netflix, second consecutive quarter of slowing sales.
For breaking earnings news and expert analysis.
Investors are getting a little bit more discerning about this AI spend.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app. And always on Bloomberg 92.9.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Want to understand what's really driving Australia's economy?
The RBA are still alert to inflation risk.
China-Australia relations have been deteriorating.
The ongoing discussion over the rising cost of everything.
Listen to the Bloomberg Australia podcast, winner of the 2026 Australian Audio Award for Best Money and Business Podcast. Each week, we bring you smart conversations with leaders in business and our journalists here and around the globe. Subscribe to the Bloomberg Australia podcast wherever you listen.
You research your investments, you analyze markets, but have you researched your broker? For the past 3 years, Interactive Brokers' individual clients averaged a 24.3% annual return, beating the S&P 500. Lower costs, competitive rates, and access to 170-plus global markets help investors keep more of what they earn. The broker you choose matters. Interactive Brokers, member SIPC. Learn more at ibkr.com/performance.
Hello, I'm Michelle Hussein, and each week on my show, I have one thoughtful conversation that brings the world into sharper focus.
I always trust in the president. He's playing three-dimensional chess.
Every time you say something tough to Mark Zuckerberg, he looks like you killed him. I just never want to talk about Vladimir Putin again.
Every week, one conversation that helps you make sense of the moment. The Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
I'm Lisa Mateo, inviting you to join us for Bloomberg This Weekend. Catch the show Saturdays and Sundays starting at 7 a.m. Make Bloomberg #1 on your weekend to-do list. Watch and listen on Bloomberg Radio, TV, and the Bloomberg Business app.
This is WBOS, WBOS HD1 Brookline, Boston. WNBP Newburyport, W291 CC Haverhill, W221 EE Topsfield. Programming paid for by Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump threatens heavier strikes on Iran if the Houthis hit again. Welcome to the Thursday edition. As the president responds to attacks on 2 ships in the Red Sea by Houthi rebels in Yemen. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, the market is responding today to the idea of a new front opening in this war.
Yes, responding indeed, with oil, Brent crude at least, topping $100 a barrel once again. We're looking at a more than 6 percentage point move on both Brent and WTI today as the president threatens threatens to effectively hold Iran responsible for the action the Houthis, which are an Iranian-funded proxy, may take in the Red Sea. All of it pointing to escalation as the president, according to Axios reporting at least, is nearing a decision on a potentially, quote, massive attack on Iran.
The next 24 to 48 hours could be interesting here as we now include the Red Sea on top of the Strait of Hormuz for another potential choke point to consider. And interesting to see interest rates pop higher on all of this, along with oil prices, and it's really depressing stocks. We do have a great opportunity, though, this hour to talk with some stakeholders here on Capitol Hill. Another parade of senators coming up from the Republican side of the aisle, not only weighing in on the war in Iran, but a boatload of legislation that's now headed their way.
Yeah, including funding for the Pentagon related to costs to the Iran war. There's a lot on these senators' agendas, including speaking with us today. We'll speak with Republican Senators Ted Budd of North Carolina and Todd Young of Indiana. Plus, we'll speak with a member of the House of Representatives as well when Congressman Brian Stile of Wisconsin joins us, too. It's going to be a busy hour, so let's begin it right away as we get a check on the markets with Charlie Pellet. Big move in oil, big moves in a lot of other places, Charlie.
Indeed. Specifically, what's going on with a couple of the tech names that we heard from last night, both Tesla and also Alphabet. Got to begin with crude oil, though. Kaylee touched on it there. Right now, looking at a 7% jump in Brent crude, holding above $100, $183 for a barrel of Brent, up now by 7.2%. The move in West Texas Intermediate crude, equally as big, up 6.5%. 92.49 on WTI. Again, that is a move of 6.5%. We'll keep you posted on crude throughout the day. Right now, though, that is moving stocks lower. The S&P is down 87 for the S&P 500 index, a decline now of 1.2%. Dow Industrial is down 464 points on the Dow, a drop of 0.9%, while NASDAQ is down 526 on the NASDAQ Composite Index, a decline there of 2%. NASDAQ 100 Index down 1.7%. Last night we heard from two of the Bloomberg Mag 7 names. Today we've got that index down by 4.5%. Again, bears repeating. Alphabet down by 6.5%. Tesla, though, is down by 13.8% after earnings. The VIX right now is advancing. We've got the VIX holding above 19, Wall Street so-called fear gauge. The 10-year, 4.69%. Right now, looking at the 10-year, moving higher. We've got the 2-year, 4.35%, and the 30-year, 5.17%. Gold down $77 the ounce for the precious metal, a decline of 1.9%. 4,051, that crude move bears repeating, closing in on 101 for a barrel of Brent now, $100.85, up by 7.2%. I mentioned Alphabet, lower after earnings. The Google parent raising its capital spending forecast to as much as $205 billion this year. Alphabet down 6.6%. Tesla's profit tumbled despite strong EV deliveries in the most recent quarter, pressuring Elon Musk's plan to refocus the company on AI and robots. Tesla shares down now by 13.9%. Also out with earnings last night, we heard from IBM. It cut its full-year sales outlook. IBM shares down 0.2%. Intel will be reporting after the close of trading today. Intel shares down now by just about 1.2%. While we are on earnings, cannot ignore defense companies Lockheed Martin and RTX. They raised their full-year sales outlook as geopolitical tensions around the world boost defense spending. Right now, we got Lockheed Martin shares pushing higher by 9.9%. RTX up 7.9%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, a comprehensive look at the markets from Charlie Pellet. It's a very busy day. Thank you very much. It's a busy day here in Washington as well, and it's been, frankly, a busy week. The House of Representatives were able to finish their work on some of the must-pass items that the Speaker wanted to see cross the finish line before the recess break yesterday. We, of course, saw the passing of a continuing resolution earlier this week to try to keep the government lights on through to December. A passing yesterday of the budget blueprint, the resolution that would allow for more funding for the Pentagon related to the war with Iran, as well as aid for farmers and a few other things, including money for grants to states to enact voter ID measures. They also were able to pass the National Defense Authorization Act, something that typically happens on a bipartisan basis and indeed did in the House of Representatives. That's one chamber down. Now it becomes a question of the upper chamber, the United States Senate, Joe, which often brings with it its own set of stories and certainly its own set of procedures that sometimes make this battle a little bit more of an uphill climb.
Well, I guess this is going to be a sequencing issue here,
Yeah.
right? John Thune wants to do this differently than Speaker Johnson did. And yes, we've seen this movie before. The idea is he wants the government to be funded before we get to any reconciliation or extra Pentagon money here. You know, I recall our conversation with Patrick McHenry yesterday, who described senators as a bunch of bulls sitting out in the sun in a field chewing grass. They are at a different pace and they approach policy differently. And we have one of those bulls with us right now. Senator Ted Budd, the Republican from North Carolina, joins us, a member of the Senate Armed Services Committee and the Select Committee on Intelligence. So we're going to have some issues to talk about here when it comes to the war in Iran. But Senator, welcome back to Bloomberg TV and radio. It's always good to see. I'm just wondering your thoughts on the approach here. Is this the responsible thing to do? Fund the government first, then deal with the extras later?
Well, thanks for the shout out. As a bull, I did grow up on a farm in North Carolina, still live there today. So
there you go.
Give them a shout out when I get back home. So, look, I commend the House for what they did. Speaker Johnson is dealing with a very narrow margin. For him to get on the NDAA and get it passed in a bipartisan fashion, I think that's fine. Look, it's a very different way we look at it over here in the Senate. We want to make sure that the government is funded. We want to look at either regular appropriations rather than a reconciliation. And then let's get on to the NDAA. So we want to do all of these things as well. So I think we have similar aims, but in a different sequence, as you pointed out earlier. But one of the things we've never seen before is the Democrats play politics with the NDAA. Usually they vote to advance it, and then we negotiate in conference between the Senate version and the House version. They didn't even vote to advance it. We've never seen this before. This seems like they're punishing our men and women in uniform because of some policy disagreements. That's never been done before. You can have those policy disagreements, but let's make sure we're supporting our warfighters, especially in this unstable time right now. It's absolutely never been done like this, and I can't believe the Democrats are playing politics like they are this week.
Well, there were 6 members of the Democratic caucus in the House who did cross party lines to vote to advance the NDAA yesterday, Senator. But when we consider the defense authorization and the money for the Pentagon that is embedded in the budget resolution that the House also sent over, you testified or gave a statement at the same hearing that the Defense Secretary Pete Hegseth did before appropriations this week, in which he said the war already has cost $37.5 billion. And the war, as we speak, Senator, is still ongoing. By the time the Senate does get around to passing potentially this resolution or reconciliation getting across the finish line, is the price tag for the Pentagon going to need to be much higher?
Look, I'm very supportive of the point of the supplemental and making sure that we supply our stockpile and our munitions. But let's remember that there's support in there for farmers. There's support in there for disaster in different parts of the country. Let's remember in Western North Carolina, just under 2 years ago, we had a major disaster with Hurricane Helene. So when they give us the number 0 for that, that's the wrong number. We want real support for Western North Carolina, especially if it's going to include something broader than just defense replenishment. We want to make sure that they have what they need, that the Pentagon has what it needs. But if you're going to include disaster, you make sure that you include Western North Carolina.
I want to ask you about the war in Iran, which appears to be escalating by the moment. And to that end, we're now seeing $100 a barrel oil once again. Senator, from your view on the Armed Services Committee and Intel, I'm wondering what you're hearing from the administration. Axios is reporting the president is soon to decide on a major escalation, a major assault on parts of Iran. He's threatening bridges and power plants. Is this about to intensify?
Well, the goal is to open the strait and make sure that we keep our warfighters safe and eventually bring them home. We don't want a forever war. So the president wants all options on the table. He wants the best military advice. He wants to be decisive. He's tired of playing games. Look, he was serious about negotiations and the ceasefire to use for negotiations to end this diplomatically. But the Iranians were only using it to delay and diffuse, delay things into perpetuity, which is part of their strategy. They know that they can't win, but they can succeed through delay and then operating in a diffused manner through proxies, through the Yemenis and the Houthis, or through Hamas or through Hezbollah. So all of those are Iranian proxies. So if you cut off the head of the snake, you fix so many problems. But the president wants to end this decisively and get our troops home.
Well, and as you say, Senator, you don't want to see another forever war. So how long should the president have to try to bring this to an end? You and your colleagues voted down another war powers resolution in the Senate today, even though one did pass the House this morning. Will there come a time ever that you would cast a vote on a war powers measure? What would be the line for you?
Well, the challenge with the war powers resolution, while it may sound great on its face, and we certainly need to have those constitutional debates, the president needs every option at his disposal, especially when he's navigating very complex waters in the Middle East. Anytime you pass a war powers resolution, as we've seen pop through the House or the Senate at any particular time in the last several weeks, it weakens the president's hand, which is really putting our war fighters in danger. We want to end this quickly, and so we need to present a unified strength, or unified front and full strength, and that way we can win more quickly. Anytime they see us fractured internally, our opponents will use that to their advantage, which hurts our men and women in uniform.
You know, we're looking now at a potential double choke point, and you don't need me to tell you, as Houthi rebels attack a couple of ships headed for the Red Sea. Do people in North Carolina need to brace for higher prices? We're looking at triple-digit oil today, and gas is well above $4 on a national average. If this is another choke point, Senator, what does it mean for consumers?
Well, the goal is to get energy prices down. They were trending down under President Trump because we've basically been pro-energy. That's what puts us at this position. When you look under Joe Biden in 2022, when Russia invaded Ukraine, you saw these prices skyrocket, well over $100 a barrel, gas, $5 a gallon in some parts of the country. And that's because they were anti-energy. We're having a significant conflict in the Middle East, and yet we're $3.50, $4, and we want to get it back closer in that $2 or $3 range. But we can certainly do that because we've been pro-energy. If we allow the broader administration policies to take place, those choke points in the Middle East actually matter less. So we need to make sure that we're pro-energy for domestic production here in the U.S., and that actually makes us safer and less dependent on these Middle Eastern choke points. But I will say, there are so many allies that we have over there. We have troops in the region, even before this conflict. So we need to make sure that we defend them and we don't let the chief state sponsor of terror metastasize and actually get a toehold again. We need to end this, and we need to do it decisively, and we need to do it quickly and bring our troops home safely.
All right, we will leave it on that note. Senator, thank you so much for joining us. The Republican representing North Carolina in the United States Senate, Ted Budd, thank you for being here on Bloomberg TV and radio. And as we reflect on our conversation with the senator and on congressional matters, we turn now to our political panelists. Jeannie Sheehan Zaino, a Bloomberg politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center, joins us alongside John Seaton today, a Republican strategist and founder and CEO of Echo Canyon Consulting. Welcome to you both. John, we were just hearing from the senator there that the Senate is likely going to try to do things in a different order than maybe the House or the president would desire. We may see some changes to this budget reconciliation effort, and it will be under the leadership of the majority leader, John Thune, who the White House press secretary, Caroline Leavitt, said today Trump's patience with Thune is, quote, running out, to which John Thune responded to reporters on Capitol Hill saying, well, maybe she or somebody else ought to get on the phone and get the votes. Are we about to see a real breakdown here between the White House and the Senate leadership?
I'm not so sure. I do think that there's, a little bit of saber rattling from time to time. But from what I understand, Leader Thune and the White House have a very good relationship. I mean, look, at the end of the day, you've got to be able to count to 50 and sometimes 60 when you're trying to get things through the Senate. And as much as the leader or the White House might want to get something passed, you're still kind of at the mercy of each individual senator, a lot of whom have very strong opinions, have very strong beliefs on how things need to get done. done. Some of them are in for very tough re-election fights, and so I do think that there may be a little bit of saber rattling. I don't think that there's going to be a full-on collapse of relations there. I think that the relationship is still pretty good.
Jeannie, you heard Ted Budd talk about the NDAA. Pointing directly to Democrats for playing politics with what we always refer to as must-pass legislation, the last bastion of bipartisan agreement. How would you respond to him?
Yeah, I think the response is pretty clear. It's that the Republicans have been weaponizing this bill. It's a hyper-partisan bill. There's poison pill amendments in it. There's culture war agenda items in it. They haven't even addressed the issue of this unauthorized war. And so this is where Democrats are ready for this fight. They want to take this fight on. And I would just note the interview you guys did yesterday with Rand Paul. I mean, they are talking about a 1.5, and I understand NDAA is not appropriation, but they're talking $1.5 trillion for defense. That is essentially going to support a war that is unauthorized and widely unpopular without any offsets at a time when our budget is closing in, or deficit rather, is closing in on $40 trillion. You add that to things about gender care, the Save America Voting Act, all of the other things that they have coupled together here, and they are the ones playing politics with this. And that's why Democrats, unlike in the past, feel confident in saying that this is not your grandfather's NDAA, Joe. I guess that's how I would put it. It's a hyper-partisan bill coming from the Republicans.
Well, and obviously coming during active wartime, John, as we mentioned with the Senate did not advance a war powers resolution today. The House did this morning, but these are all pre-August recess votes. And I wonder, once we're back from recess, it's past Labor Day, the midterms are literally around the corner, if you think this is going to be a different story.
I think an NDAA is going to pass. It might be slimmed down somewhat or a lot. And whatever your opinion of the conflict in Iran is right now, our warfighters do need to get the resources that they need to finish the job. So I do think that something will pass. And whether it's exactly what the White House wants or what House leadership wants remains to be seen. In fact, I would go so far as to say it probably will not be exactly what they want. That's part of governing. But I do think an NDAA has to pass and will pass.
How about war powers, John, just to pick up on what Haley was referring to? We get past primary season. Is it open season?
I think these are largely symbolic votes. I don't think that they're going to make much of a difference. I do think that you saw, even though it did pass the House very narrowly, Republicans are largely unified and continue to support the president, continue to support the effort in Iran. I expect the same on the Senate side as well. So I don't know that a War Powers Act will come up for a vote. And if it does, I'm not sure how much teeth it really has.
All right. We've got a lot more where this came from with our political panel. John Seaton and Jeannie Shanzano will be back as we also spend some time ahead with Brian Stile, the congressman from Wisconsin who authored the stock trading ban. And we'll be speaking as well with Senator Todd Young, the Republican from Indiana, continuing our conversation today with lawmakers after a flurry of bills were passed in the House of Representatives. Alongside Kaylee Lyons, I'm Joe Matthew. Thanks for being with us on Balance of Power. It's the Thursday edition. As we make our way through the trading session, we'll get an update as well from Charlie Pellet. The news from Iran sending oil prices back to triple digits and stocks sharply lower. This is Bloomberg. Make sure to subscribe to the Balance of Power podcast on Apple, Spotify, and wherever you get your podcasts, and listen anytime at our website. It's Bloomberg.com.
Today, it's a Bloomberg News exclusive.
The United Nations is crucial. It's a world of fragmentation. It's a world of tension.
For the first time in 10 years, the United Nations is set for a leadership change.
Trust in the organization is waning.
The candidates for Secretary General debate live from UN headquarters.
We are stronger when we stand together.
UN Town Hall, the next Secretary General. Today at 5 p.m. Only on Bloomberg 92.9, Bloomberg Television, and the Bloomberg Business app.
The entertainment business is changing fast. At Bloomberg Screen Time, we'll bring together the executives, creators, investors, and entrepreneurs shaping what's next in Hollywood, music, sports, and gaming. We'll talk about the biggest stories in media, like the merger of Paramount and Warner Brothers, the booming live events business, and the potential impact of AI. I'm Lucas Shaw, and I'll be hosting Bloomberg Screen Time in Los Angeles September 30th and October 1st. Join us and request your invitation today at bloomberglive.com/screentime/radio.
Man, I love this place. I've been surfing here since I was a kid. Now, seeing my grandson out on the water, it means everything to me. Watching him and taking in the blue waves, the sea breeze, the blurry horizon.
If you have geographic atrophy, or GA, subtle changes in vision could mean it's progressing toward irreversible vision loss. Izervay is proven to slow GA progression and could help preserve your vision for longer, so you may keep seeing the world around you. Izervay, or avacincaptad pegol, is an eye injection. Don't take it if you have an infection or active swelling in or around your eye. Izervay can cause eye infection, retinal detachment, or increased risk of wet AMD. Izervay may cause blood in the white of the eye, blurred vision, or a temporary increase in eye pressure. Do not drive or use machinery until vision has recovered after an eye injection or exam. Ask your retina specialist how you can slow your GA with Izervay. To learn more, call 1-855-IZERVAY or go to izervay.com. Paid for by Astellas Pharma.
This week on Leaders with me, Francine Lacqua, I speak to Vimal Kapoor, the chief executive of Honeywell, about his family's reaction to him getting the top job.
Nobody expected me to get this far.
His advice for workers in dealing with the growth of AI.
Skill elevation is the name of the game.
And how he's learning about management today.
YouTube is kind of new way to go.
Listen and watch Leaders with me, Francine Lacqua, on Bloomberg Television or wherever you get your podcasts.
Now, your 3-day weather forecast on Bloomberg 92.9.
Lots of sunshine for the afternoon, maybe a little hazy, a little wildfire smoke trying to move in, high near 80. Clear skies tonight, we drop to the lower to middle 60s. Mostly sunny skies on Friday, high in the lower to middle 80s. Clear Friday night, 60 to 65. Sunshine and a few clouds Saturday, high 80 to 85. Mostly sunny Sunday, upper 70s. I'm Scott Kaplan with your weekend forecast on Bloomberg 92.9.
Today's AM radio is stale and repetitive.
Stay with Bloomberg 92.9, your best source for news on the FM dial, and get breaking global news with context. Bloomberg 92.9. Faster, smarter, better.
It's 1:20.